Commissioner, the next witness is Mr Russell Howden from Select AFSL.
Yes, Mr Howden. Mr Howden, once you've got all your papers sorted out, would you prefer to make an oath or take an affirmation?
I'd like to take an oath, please.
Yes, and swear the witness.
I swear by Almighty God
I swear by Almighty God
that the evidence I shall give
that the evidence I shall give
will be the truth,
will be the truth,
the whole truth,
the whole truth,
and nothing but the truth.
and nothing but the truth.
Thank you very much, Mr Howden. Do sit down. Yes, Mr Chair.
Thank you, Commissioner. So would you give the Commission your full name, please?
Russell Hugh Howden.
And your occupation is you are Managing Director of Select AFSL, correct?
That is correct.
Your professional address is level 11 North Tower, Railway Street in Chatswood, New South Wales. Is that correct?
That's correct.
And do you have you are here by virtue of a summons issued for you to attend, is that correct?
That is correct.
Do you have the original of that?
Yes, I do.
Commissioner, I tender that.
Exhibit 4.172, the summons to Mr Howden.
And Mr Howden, you have provided witness statements in response to rubric issued by the Commission numbered 4-23, 4-31 and 4-42, correct?
That is correct.
You have also provided some further information in response to notices to produce served upon you by the Commission numbered NP 475, 495, 497 and 654, is that correct?
That is correct.
The information given in those witness statements and responses, are they correct to the best of your information, knowledge and belief?
Yes, they are.
Commissioner, I tender those documents.
The witness statement in answer to rubric 4-23 becomes exhibit 4.173. The witness statement in relation to rubric 4-31 will be exhibit 4.174. And the witness statement in relation to rubric 4-42 will be exhibit 4.175.
And Commissioner, I also tender the responses to the notices to produce that I asked Mr Howden about. They have further information in addition to, I'm not tendering the documents, but in the actual response letters there's further information provided.
I'm not then exactly clear what the tender is, Mr Cheshire. Is it letters, documents, or what? Ordinarily speaking, we would presently be content with the witness statements, and then if need arises, individual documents produced in relation to the NTPs will come in, but ordinarily I would not go beyond the witness statements.
The way that matters developed, Commissioner, is that the notices to produce were overlapping with the rubrics in time.
I'm sure they were.
And so Mr Howden has provided some information which is only in what are responses, being the letters, which effectively said, in response to the notices to produce, which say, in effect, here are the documents you've requested and here is some further explanation as well.
Well, if counsel assisting seek to tender that, so be it. Otherwise, we'll content ourselves with the witness statements unless when it comes your turn to examine further, there is some occasion to tender those further documents.
I'll speak to Ms Orr about that. Thank you,
Yes,
Commissioner.
thank you. Yes, Ms Orr.
Mr Howden, you're the Managing Director of Select AFSL.
That is correct.
And Select is a wholly owned subsidiary of a company called Blue Ink Group Proprietary Limited.
Correct.
And you've been put forward by Select to answer questions about the promotion and distribution by Select of funeral insurance, as well as in relation to the experience of Ms Marika that we've just heard evidence about.
Correct.
So Select promoted and distributed funeral insurance until earlier this year, is that right?
That is correct.
And the products promoted and distributed by Select were products which were issued by an entity called St Andrews.
Correct.
And the relationship between Select and St Andrews commenced in about 2013. And from about 2010, St Andrews was owned by the Bank of Queensland.
Sorry, can you repeat that statement?
From about 2010, was St Andrews owned by the Bank of Queensland?
I'm not sure of the precise date, but yes, they were owned by the Bank of Queensland.
And St Andrews has recently been sold by the Bank of Queensland to another entity?
That's correct.
Now, Select promoted and distributed the St Andrews funeral insurance products under the brand of Let's Insure.
Correct.
And was Select the exclusive distributor of St Andrews funeral insurance products?
I can't say definitively whether St Andrews had relationships with other insurers. I know that prior to entering into an arrangement with Select, they did have other products with other distributors.
So Select stopped distributing St Andrews funeral insurance products very recently on the 19th of March this year.
That's correct.
Now, before I proceed with some further questions, I just want to clarify a few points of terminology. In the request for a witness statement that was sent by the Commission to Select, the Commission asked for information about Select's operations, you recall that?
Yep.
And some of the information that the Commission requested sought to differentiate between Aboriginal and Torres Strait Islander policy holders and non-Aboriginal and Torres Strait Islander policy holders.
Correct.
And in your statement, you tell us that Select does not request or gather and has not requested or gathered information regarding applicants' ethnicity for funeral insurance policies.
That is correct.
Okay. But you also tell us that in line with guides provided to Select by St Andrews and by ASIC, Select has classified its customers residing in postcodes with an Indigenous population of 15% or higher as being Aboriginal Australians.
Correct.
And you make clear in your statement that that doesn't mean that all policy holders residing in those postcards are Aboriginal Australians.
That's correct.
So when you and I speak of Aboriginal and Torres Strait Islander policy holders, we'll be speaking of people who you've identified as living in those postcodes.
That is correct.
Okay. Now, you've provided information about Let's Insure policy holders in your statement. As at the 13th of June this year, the date of your first statement, there was still 31,043 policies on issue to non-Aboriginal Aboriginal and Torres Strait Islander people.
Correct.
And that was for about 57,000 total lives insured.
Correct.
So that meant there were about 1.86 lives insured per policy.
Using that metric, yes, that's correct.
And you tell us that your annual premium income for that group is over $22 million. This is 4.4 in your statement, Mr. Howden.
Yep. My apologies, Ms. Orr. I actually thought you were going to start with rubric 431, but you've gone to rubric 423. I don't have 423 with me at the moment.
Is that the other folder you have?
That's the supporting annexures.
I think your counsel will pass you a copy
Okay.
of your other statement now.
Thank you.
It's also, or was also on the screen. Mr. Howden?
Okay, yes, I do have that stat now.
So we see from that paragraph 31,043 policies and an annual premium income of over $22 million for policies on issue to non-Aboriginal Australians.
Correct.
And as at the same time, there was still 983 policies on issue to Aboriginal and Torres Strait Islander people.
Correct.
See that?
Yep.
With about 2,544 lives insured,
That's correct.
which means about 2.59 lives insured per policy on issue, as opposed to the 1.86 for non-Aboriginal and Torres Strait Islander
Correct.
people.
Correct.
And the annual premium income for policies on issue to Aboriginal Australians is just under $840,000.
That's correct.
Now, as at the date of this statement, the 13th of June, St Andrews had a significant number of funeral insurance policies on issue to young people. Is that right?
I'm not sure how you define significant.
Well, if we look at the figures in your statement here, starting with 4.6, if we start with policies on issue to non-Aboriginal and Torres Strait Islander people under 18 years of age, there were 10,535 lives insured.
But that is not policies, those are lives insured.
Yes. So 10,535 lives insured where the life insured was under 18
Correct.
years of age,
Correct.
for a total premium income of about $512,000.
Correct.
And in respect of Aboriginal and Torres Strait Islander people, there are currently about 683 lives insured where the life insured is under 18 years of age.
Correct.
So why did Select sell funeral insurance policies to children?
We don't sell per se to children. We offer two types of plans. One is a single plan, which by definition is one life insured on that plan. A family plan is typically two adults, and then we ask the person at the time of the call, would you like to add your children? And that is similar to what the rest of the industry does. Sometimes they call it children's cover or another definition, but it's just offering the ability to have the whole family covered under one policy. That doesn't mean to say that we are targeting people under 18 years old.
You've got a total annual premium income from the 683 Aboriginal and Torres Strait Islander lives insured under 18 of $38,000 presently.
That's correct.
And for non-Aboriginal and Torres Strait Islander people between the ages of 18 and 25, you've currently got 5,439 lives insured. We see that from 4.8.
Yes.
For an annual premium income of just under 1.07 million.
Yep.
And for Aboriginal and Torres Strait Islander people between the ages of 18 and 25, you've got 335 lives insured for a total annual premium income of just under $75,000.
That's correct.
That's 4.9, which is just cut off at the bottom of the screen. So what about that age bracket, Mr. Howden? Why sell funeral insurance policies to people aged between 18 and 25?
Well, again, you can have a family policy where the older person could be 35 and the partner could be 23 or 24. Or you could have older people whose son is still residing with them and have the option to add that person to the policy as well. So there's a variety of reasons. If you look at the overall mix of policies that we have, roughly 64% is over 50 years old. Look at the number of policy owners, and that's always been our target, is that sort of age band.
And over the last 5 years, Mr. Howden, you've distributed a number of different types of funeral insurance policy.
That's correct.
Some policies have a fixed premium structure.
Correct.
Can you explain what that is?
Fixed premium essentially means that your premium stays fixed for the life of the policy, and so does your sum insured stay constant.
And some policies have a capped premium structure. Can
That's
you
correct.
explain that?
Cap premium means that you won't pay out, your benefit amount will never be less than the premiums that you've paid.
And other policies have a stepped premium structure,
That's correct.
and that's where the amount of the premium increases as the person gets older.
Correct.
Do the majority of your policy holders have a stepped premium structure?
Yes, they do.
Now, are you familiar with ASIC report 454 on funeral insurance, which you may have heard me take Mr Jones to earlier today?
Yes, I am.
Are you aware that ASIC recommended in that report that funeral insurers provide an upfront estimate of the total cost of the policy?
Yes, we are aware of that.
Does Select do that?
I think in the response to that, we said at the time we don't actually, simply because we've got multiple benefits on the same policy, it would be quite complex to do quite a few iterations of that. So that particular feature of giving a quote to age 90, or age 85 should I say, we don't do. But we did take on board the other recommendations contained in that report, including flattening the premium at the older ages, making sure they were level from age 80, and no further premiums from 85.
So you haven't taken up the recommendation of ASIC to provide an upfront estimate of the total cost of the policy because you say it would be too difficult to do so?
The average length of a call is about 20 minutes, and depending on how many people on that policy, because often what happens, you give a quote and a client will ask you to give a different quote. So, you know, if we had to do a calculation on each case up to age 90, it's unlike a retail, an advisor-based product where you would do a series of forecasts. If it was just one option that you could select, and that was no rider benefits or ancillary benefits attached to that, it'd be quite easy to do because we could just simply say for that sum insured, that's what the total premium will be, assuming you don't take you take the fixed premium option or you take the step premium option.
It would assist your potential customers to know the total cost of entering into a policy with you up front, wouldn't it?
I agree it would assist them, yes.
You agree,
Yes, it would assist them.
but you don't provide that assistance.
Currently, we don't do that, no.
Do you have any plan to provide that assistance?
If we can work out a way to do it which is efficient from the client's perspective, we're happy to incorporate that feature.
Yes, so you said your average call was 20 minutes, is that right?
Depending on how many people on the policy,
Yes, and how much longer do you think it would take to explain to the customer what the upfront cost of the policy was?
because typically how the call would start, we would ask the client, how about I give you a quote for a certain amount? Then they'd say, is that affordable? If it's not affordable, we'll try a different amount. Then we would add different benefits to that and say, would you like to add accidental death or accidental serious injury? Then we would say to you, would you like to add children? Take children on, or yes or no? So there's quite a few permutations in terms of where that call could go. And if each time we had to do a forecast, it would be quite tricky and it'd be quite lengthy to do a forecast each time.
So each time you're discussing a different option with the customer, they don't have a critical piece of information, which is the total cost of that option to them.
I know, at the end of that quote, there's no doubt what the cost is. And at the end of the call, we recap the cost for each benefit there.
But do you give the total upfront cost to the customer?
Sorry, I'm perhaps misunderstanding you. We give them the upfront cost of the policy from the first year, if that's what your question is, most definitely.
No, I'm talking about an upfront estimate of the total cost of the policy.
Assuming they went to age 85. No, we don't do that.
Well, can I understand how many variables there are? There's 3 forms of premium payment, fixed, capped, stepped. Is that right?
Correct?
There's the age of the life insured.
Whether they smoke, what their gender is,
Yeah,
whether they take accidental death, accidental serious injury.
yeah. I think we're at 6 or 7. Yes, go on. What other variables are there?
Those would be the main variables, Councillor.
6 or 7 variables?
Correct.
Yes.
If we look at the recommendation made by ASIC at ASIC 0800 008 0030, within that document at 0035, we see that the recommendation is the second dot point in the right-hand column, provide an upfront estimate of the total cost of the policy based on the options offered. For example, stepped or level premiums with or without consumer price index or automatic sum increases if the consumer lives to 70, 80 or 90. That was the recommendation made in 2015.
That's correct.
And as I understand it, you have not acted on that recommendation.
Only because of the complexity of the options.
Do the vast majority of your policy holders hold policies under which they're capable of paying more in insurance premiums than the maximum benefit that's available to them under the policy?
The vast majority, yes, would have step premiums or fixed premiums.
Have,
Step premiums?
yes, and they have a policy that allows a situation where they can pay more than they can ever recover.
Correct, but they are covered, similar to other insurance, outside the first 12 months for death by any cause, for the full sum insured.
And over the last 5 years, St Andrews has cancelled 20,322 policies held by non-Aboriginal and Torres Strait Islander policy holders. We see this at 18.1 of your statement.
Yes?
So that's about 65% of the current number of policies held that have been cancelled by St Andrews.
That's correct.
And in comparison, about half of that number, 11,082, we see this from 19.1, non-Aboriginal and Torres Strait Islander policy holders cancelled their own policies within that period.
That's correct.
And in the same period, In the same period, St Andrews cancelled 1,582 policies held by Aboriginal and Torres Strait Islander people.
Correct.
So on my calculation, that's about 161% of the current number of policies held by Aboriginal and Torres Strait Islander people.
I think the reason for the spike in it, I'm sure it will come up later, we affected a remediation program which distorted that. So there was like 640 policies and that would explain the spike there.
You say that explains the high levels of cancellation by St Andrews.
It's one of the contributors to the higher.
And we can see that a small fraction of that number, 282, Aboriginal and Torres Strait Islander policy holders cancelled their own policies in the same period.
Correct.
Now, is the most common basis for policy cancellation by St Andrews non-payment of premiums?
That would be the main reason, yes.
And over the last 5 years, Select has offered its funeral insurance policies through 4 different sales channels, is that right?
That's correct.
Television advertising is the first.
Correct.
And the number of policies sold via the television channel is fairly small, is that right?
Correct.
The second channel is digital channels.
Correct.
and that accounted for about a third of the policies sold to non-Aboriginal and Torres Strait Islander people,
Correct.
and just over a quarter of the policies sold to Aboriginal and Torres Strait Islander customers.
Correct.
And Select also sold its policies through what you've called the voice channel.
Correct.
That involved engaging external call centres to contact prospective customers.
Correct.
And that's what you refer to in your statement as an outbound sales process.
External call centre would generate leads to pass through to us to call.
So you engage someone else to generate a lead.
Correct.
A prospective customer is identified by an external party.
So what those external parties would do, they would call people that aren't on the Do Not Call register, following an approved script to gauge an interest as to whether they'd be interested in getting a quote. And once they got that interest and the approval, they would pass the lead through to us.
So they pass the name and phone number
Correct.
through to Select. And that channel, that's the outbound sales process, is that right? That you refer to as the voice channel.
I know the only true, I suppose, inbound would be television. And then you have digital, which is survey, which is almost like a quasi-inbound because someone has expressed an interest online to getting a call back. And then you also have what we call the voice leads, what we just discussed, both of which would involve an outbound call from us,
I understand.
whereas the TV would be inbound.
And the voice channel accounted for the majority of sales to both non-Aboriginal and Torres Strait Islander customers and to Aboriginal
Correct.
and Torres Strait Islander customers. It accounted for about 64% of policies sold to non-Aboriginal and Torres Strait Islander customers,
Correct.
and about 53% of policies sold to Aboriginal and Torres Strait Islander customers.
Correct.
And that was the channel that we've heard Select used to contact Ms. Marika.
The recording that you played back was from a voice lead. Yes, so that's a survey lead.
So that's how the sale to Ms. Marika was affected, through that voice channel.
Correct.
Okay. And Select has a final channel, which is a channel that you've referred to in your statement as the referral channel.
Correct.
And did this channel stop being used at some point?
As we will go through later, yes, we had a referral process in place, but because it was abused, we stopped that process.
And as we'll come to, that was in May last year that you stopped the referral channel, is that right?
Correct.
But before that time, when a person signed up with Select, they'd be sent a welcome pack,
That's correct.
and the welcome pack included a refer a friend flyer,
Correct.
and Select asked new policyholders to provide contact details for their friends and family.
Correct.
Now, if we could just look at that refer a friend flyer, SAF 0004 0001 0066. This is a copy of the refer a friend flyer, Mr. Howden.
It is.
And the flyer tells us on the first page that Let's Insure is always looking for ways to reward our clients for their loyalty,
Correct.
and that if a new policyholder refers a friend or relative who's also new to Select and who proceeds to take out a policy, the new policyholder will receive a $20 Coles Myer gift card.
Correct.
Now, there are some disclaimers suggesting that policyholders should seek their friends' or relatives' permission to refer them. Do we see that on
Yes.
this first page and on the back of the form? 0067.
Yes.
But there was no requirement to give any type of positive declaration that you had obtained consent from your friend or family member before providing their details on this form.
Correct.
So what the form sought was the contact details of the people to be referred, their name, their relationship to the new policy holder, their postal address, their email address, and their contact numbers.
Correct.
And we see on the back of the page a reference, on the back page, sorry, a reference there on the flyer. I'll just find the part to blow up. I'm sorry, it's on the front page in the second paragraph, and there's no limit on the number of times you can refer friends, so you can keep on being rewarded. You see that?
Yes, I do.
So that was the refer a friend flyer that was used when your referral channel was still operational.
That's correct.
I tender that document, Commissioner.
Let's refer a friend flyer as AF 0004 0001 0066 Exhibit 4.176.
Now, you tell us in your statement that sales made via the referral channel accounted for about 2.4% of the policies that are presently on issue to non-Aboriginal and Torres Strait Islander customers.
Correct.
But they account for about 19.94% of the policies on issue to Aboriginal and Torres Strait Islander customers.
That's correct. And as I said earlier, when we get to that part, we'll explain what happened there.
Yes, so of the 4 sales channels, you accept that this is the channel that has the most significant discrepancy between sales to non-Aboriginal and Torres Strait Islander people and sales to Aboriginal and Torres Strait Islander people.
For 2015, yes.
Yes, well, across the 5-year period.
But it was concentrated in 2015
All right.
and it normalised outside those years.
So it was the events in 2015 that led to the skewing of those numbers, is that
Correct.
right? So in 2015, there was a spike in the number of funeral insurance policies sold by Select.
There was a growth in overall sales as a result of increased marketing spend. But there was a spike in sales to the 43 codes, postcodes that St Andrews had identified as being Aboriginal postcodes.
Yes, I see.
That's the spike. But the overall growth in 2015 was a result of increased marketing spend.
You say the overall growth was a result of your marketing schemes?
Marketing spend, yes.
Marketing
Spend.
spend, thank you. But at least a portion of that spike was principally caused by an increase in the sales to Aboriginal and Torres Strait Islander people.
I know the spike sorry, I'm not sure if I understand the question there.
So the increase in total sales in 2015, part of that was attributable to a spike in the sales to Aboriginal and Torres Strait Islander people.
Correct, yeah.
Now, we see from the table in your statement following paragraph 25.2
Yes?
Just wait till it comes up on the screen. If we could have 25.2 and 25.3 both on the screen, that will assist, because 25.2 deals with sales to non-Aboriginal and Torres Strait Islander policy holders, and 25.3 deals with sales to Aboriginal and Torres Strait Islander policy holders. And we see there a spike in relation to sales to Aboriginal and Torres Strait Islander policy holders. 2013, 14 and 16, the numbers were between 3.5 and 3.9%. and in 2015 the number more than doubled to 7.8%.
Correct.
Now, the principal source of the spike was an increase in the referral lead source. Is that right?
That's correct. If you go to my response in 28.4, you will see that referral to there increased to 43% in 2015, whereas previously it was, the prior year it was 6%, and the year after 2015 was 2%. The spike occurred in 2015.
And almost half of the sales, 46%, that were made into those 43 postcodes between January and October 2015 were generated through the referrals lead source, weren't they?
That's correct.
And that was in comparison to the referrals source generating 7% of sales outside of those postcodes.
Correct.
Now, could I ask you to look at SAF 0004 0001 0220? Now, this is an internal file note. We see from the top that you were on the distribution list for this file note.
Correct.
And we see that this document refers to some analysis that has been conducted into this funeral sales spike.
Yes.
And at the bottom of the page, paragraph 7, the analysis identified that the proportion of sales for each type of lead source were broadly comparable as between the sales in the selected postcodes and sales outside of the selected postcodes, except for the referral lead source. The referral lead source accounted for 622 sales made in selected postcodes during the review, which represents 38% of all referral generated sales during the review period, compared to the selected postcodes representing only 5 to 8% for other lead generation sources. Sales in the selected postcodes sourced through referrals during the review period, we'll just need to go over the page, accounted for 49%, which compared to only 8% outside of the selected postcodes. That was the results of the analysis?
Similar to the findings in this table, yes.
Yes, I'll tender that document, which we'll come back to.
Select AFSL file note concerning meeting of 27 February 17, I think. SAF 0004 0001 0220, Exhibit 4.177.
You tell us in your statement that during 2015 you were aware of an increase in the overall sales of funeral insurance policies.
That's correct, because there was a planned increase based on increased marketing spend.
So you tell us that you believed at the time that the increase in sales was due to your increased marketing activities.
That's correct.
And you say that you weren't aware at the time of the proportionate increase in the number of sales attributable to Aboriginal and Torres Strait Islander people because you didn't have information about people's ethnicity.
That's correct.
And you tell us that Select didn't learn of the proportionate increase in the number of sales to Aboriginal and Torres Strait Islander people until the end of October 2016.
That's correct.
And Select learned of that issue when St Andrews notified Select of the internal analysis that it had been doing.
That's correct. St Andrews Actuarial Department, and I think it was pursuant to the ASIC report, 454 report, did an actuarial analysis, and they brought that to our attention. At that time, we didn't have an actuary.
You didn't have an actuary?
We didn't have an actuary because we're not a life insurance company.
So
and the first time we were aware of it was when St Andrews brought it to our attention.
Yes, so St Andrews had done a portfolio review.
Correct.
And that analysis it was fed back to you at Select.
Correct.
And if we look at SAF 0004 0001 0207, we see this as an email chain entitled Let's Insure Funeral, Portfolio Analysis and Questions. And we see from the first page that St Andrew's internal analysis was focused upon ensuring that there was not an over-representation of sales to Indigenous communities that could be construed as potential mis-selling. Do you see that reference in an email to you on the 31st of October 2016?
Yes, I do.
And we see from the graph in that email that the analysis undertaken by St Andrews led them to come to the realisations that we've just discussed, that there had been a spike in sales to customers living in postcodes with a high proportion of Aboriginal and Torres Strait Islander people, and that the spike was largely attributable to the referrals lead source.
Correct.
I tender that email chain, Commissioner.
Emails to Howden and others, 31 October 2016, SAF 0004 001 0207, Exhibit 4.178.
Now, you tell us in your statement that when you learnt of this spike in sales, you were surprised.
We were very surprised by it, yes.
And this was because there'd been no specific change in lead generation or acquisition processes or targeting of sales within those postcodes.
Correct.
And you attributed the spike to 2 sales incentive arrangements.
Correct.
I want to come back to those incentive arrangements, but once this was identified, there was an investigation.
As soon as it was brought to our attention, we did an investigation, and we narrowed that down to the referrals. We then analysed it by representative, and we narrowed it down to 2 representatives that accounted for over 50, it was 54%, that had made the bulk of those sales.
So you found that there were, in your words, in your statement, abuses of the referral processes by 2 particular sales representatives.
Correct.
Now, you referred to 2 representatives in your first statement, but since then, have you found out that there was at least 1 more sales representative who abused those processes?
That particular individual relates to Miss Marika.
Yes.
And that was at the back of a voice lead. And he made a referral outside one of those 43 postcodes.
Yes, so you hadn't identified the person who sold Ms Marika her policy as
Correct,
one of the 2.
because it wasn't part of those 43 postcodes, yes.
I'm sorry?
The analysis we did was of the 43 postcodes.
Yes, and Ms Marika didn't reside in one of those postcodes. Now, do you still consider, Mr Howden, that the abuse of the referral processes by those particular sales representatives was responsible for the spike in funeral insurance sales to Aboriginal and Torres Strait Islander people by Select in 2015?
I definitely do, because if you look at the monthly analysis of one of the exhibits, certainly the year after that, it normalises in terms of an expected distribution.
Do you have any views on what motivated the behaviour of those sales representatives?
As I said in my statement, I believe there were 2 contributors to that. One was a sales incentive of a Vespa scooter, which we ran up to June 2015. And the other one was a cruise to the Sunshine Coast from Sydney, 3-day cruise, which we ran up till September.
So 2 particular sales incentive programs. That's what you regard as the cause or the motivators of this?
I think they were contributors to that, as well as the referral process, the abuse of that referral process.
Do you think that the behaviour of these sales representatives was caused by the aggressive sales tactics that were sanctioned by Select?
We'd never ever sanctioned aggressive sales tactics. If I may elaborate now, and it might be out of context to Miss Marika, and I'm sure we're going to come back to that, that was an appalling call. There's no way other than to explain that. It was terrible. And it's certainly not something that we subscribe to.
Well, I want to come to the way you train your sales representatives to conduct those calls, Mr. Howden, but do I take it for now that you don't accept that any part of this was caused by aggressive sales tactics that were sanctioned within your organisation?
I do accept with hindsight that we pushed our agents. All call centres will have productivity targets. And it's regrettable that as a result of this, the spike happened.
So you accept that you pushed your agents with targets? Is that what you said?
All call centres have targets. We've tabled those KPIs, and every call centre will have a target to achieve in terms of KPIs.
Mm-hmm. So do you think another contributor to the conduct of these sales representatives was your KPIs and incentive structures?
I'm not saying it's perfect, our structure, but in the industry that we operate, it's largely driven by commission. Over the years, we've evolved that structure. Initially, we based it just on the premium. Then we had a flat amount per policy, a flat amount per life. So over the years, we have evolved, but we do need to incentivise the staff in the call centre to be productive. But I'm open to any other suggestions as to how we can achieve that.
So do I understand, Mr. Howden, that you accept that your KPIs and incentive structure was a contributor to the conduct of these sales representatives?
In the respect of these individuals, most definitely. But I wouldn't say that it applied to all the other individuals. But
well, I'm talking about the structures that did apply, not just to these two people, but to all of your sales representatives. Do you accept that they were a contributor to the conduct of the two sales representatives?
No, what I'm saying is the commission's there for a purpose to ensure that staff are productive. I think what happened in this case, the attraction of the Vespa scooter and the cruise drove wrong behaviours in those two agents.
Well, I'm going to put to you, and I want to do this by reference to a number of documents, that this wasn't just about the Vespa and the cruise promotions. It was about more structural problems in the way you were training your staff to conduct these calls and the way you were incentivising them as to the results of these calls.
We have evolved our commission structure. It was designed to make agents productive, but at all times the intended outcome was compliant sales.
Well, you had a quality assurance and a disciplinary framework at this time, did you?
Correct.
And do you think that your quality assurance and disciplinary framework was effective to detect and discourage this sort of behaviour?
The structure was put in place from inception and was put in place by a very senior person with knowledge of the industry. We listened to a large amount of calls, and whenever there's something which requires action, we address it immediately.
So
we've provided you with copies of all those monthly meetings.
And I want to take you to that, Mr. Howden, because I want to put to you squarely that your quality assurance and disciplinary framework was ineffective to detect or discourage this sort of behaviour.
I can't say I agree with that statement.
Okay.
So.
Well, I've put three different causal factors to you, and I want to deal with those each in turn. The aggressive sales tactics sanctioned by Select, the KPI and incentive structure, and the quality assurance and disciplinary framework. So I want to ask you some questions about each of those in turn. Can we start with the way you were training your staff with sales tactics? Could I ask you to look at SAF 0007 0001 0065? This is a presentation used by Select to train its sales representatives in 2015. It's a colour version of a black and white document that you've annexed to your statement.
What date is all?
The document is not dated, but we understand it to be a document that related to training in 2015. Is that correct, Mr. Howden?
Correct. Yeah.
Yes. Now, an important message of this presentation, which I'll take you to parts of, but which I understand you'll be familiar with, is that there is no impediment to making a sale to a customer who already holds a funeral insurance policy with another company.
Provided we provide the client with a quote for comparable cover, and it's a better outcome for the client.
So you agree that there's no impediment, your staff are told there's no impediment to trying to sell to someone who already has a funeral insurance policy?
Correct.
Okay, and that's the subject of one of the slides in this presentation at 0073. So we see there that after the initial introduction, the customer should be asked if they have existing cover in place. The response by the agent will vary depending on the answer provided by the customer. Third party example, great, I speak to many people like yourself. Now that was the approach taken by the salesperson who spoke to Ms. Marika we heard earlier today.
That's correct.
Respond, who do have cover in place, and the great news is we've been priced up to 50% cheaper than other plans on the market. So I'm just going to briefly explain what we can offer you and then provide you with an obligation-free quote to save you some money. Or respond, who don't have cover in place, and the great news is we've been priced up to 50% cheaper than other plans on the market. So what I'm going to do today is explain to you what we can offer you and hopefully provide you and your family that peace of mind that if, God forbid, the worst was to happen, something would be readily available so that the finances don't have to be worried about. So that was the training given to your staff about how to handle a situation where a potential customer already had a funeral insurance policy.
Yep. That's correct.
And we see that also from another document that was in use in training your staff around this time. I'll come back to this document, but if I could tender it first, Commissioner.
Sales and service training, let's Insure, 2015, SAF 0007 001 0065, Exhibit 4.179.
So we see from a document that is Exhibit 5 to your second statement, your statement to do with Ms. Marika, SAF 0003 001 0087. Now this is another undated training document, but which we understand was in use in 2015, is that correct?
I'll just have to check the reference.
It's referred to in your statement and it's Annexure 5 to your statement, Mr. Howden.
So I agree that is the training.
Yes, I think it's referred to in your statement as a copy of a typical training pack.
What point is that in my statement?
Paragraph 1.2.
That's correct.
And if we turn to 0115 in this document, we see from 115 that Select considered it important to train its representatives to try pitching, do you see the final line? Try pitching to a customer that already has cover and also to a customer who has no cover yet.
That's correct.
So this was an identified situation and your staff were trained in how to attempt to sell policies to people who already had funeral insurance cover.
That's correct, but if as I said earlier, if they had existing cover in place, they had to make sure it was comparable. So if the client had fixed premium, we would have to quote a fixed premium option and not a step premium option. And we had to make sure that if they had ancillary benefits, we also included ancillary benefits to make sure it was comparable. So provided they were comparable cover and they were quoting, yes, they were allowed to do that.
And another important message from the sales training at Select was that it was permissible to play upon a customer's fears in order to sell policies. Do you agree with that?
I see it's mentioned in one of the points. It's not fair. It's bringing to customer the need to have insurance in place for the unexpected. That was the intent.
Well, could we have a look back at the document that I had taken you to a moment ago, SAF 0007 0001 0065. And we see at 0076 we see that your staff were told that there were 3 impulse factors that will drive the immediate decision, and they were rapport, fear of loss, and the Jones factor. The Jones factor is, I assume, a reference to keeping up with the Joneses. Is that what that is?
Oh, no, it's not quite as illustrious as that. It's merely the fact that other people have insurance.
Yes.
That was the intent behind it, to say other people do have insurance in place.
And the reference to Jones?
I don't know. To be honest, we inherited this training module from another insurer.
Right.
The reason being a sales manager joined us from that insurer. And over the years, we have improved. But the intent over there was to say, by reference to people that already have cover. And that's why they referred to it as the Joneses factor.
I see. And the presentation says below those 3 impulse factors, if you can align your product presentation to meet the common benefits and impulse factors listed above, your power to persuade will greatly increase.
That's correct.
So Select trained its sales representatives to align their presentation with a potential customer's fear of loss so that their power to persuade would increase.
The emphasis was on rapport. As I said, we inherited this from a previous company. Our emphasis was on rapport with the client. You've got to get the trust of the client to sell the features. And life insurance we do have to sell.
And you need in that process to emphasise and work on their fear of loss as well.
I see it there, but I don't agree that's the main driver.
Well, this was the presentation given to
I
your
know
staff,
it was
wasn't
the
it?
presentation, but it's not the main driver. And if you look at the sales scripts and the compliance scorecards, there's nothing that which would suggest that fear of loss is a key driver to us.
Just your training of your sales representatives?
This particular presentation.
Yes. We see that another part of this training related to objection handling.
Yes?
And I want to come to that. And another part related to mechanisms for closing the sale. Can we have a look at 0065? I'm sorry, at 0083. You see there 5 types of final close.
Yes, I do.
And at least 4 of those 5 types of final close that were endorsed by Select are designed to proceed from the assumption that a sale will be made. You see, in a direct sale, the representative simply asks for the sale.
Yes, I do.
And in the alternative sale, the representative is instructed to present 2 options and ask the customer to select one, and often both options are a sales outcome. You see that?
I see it in the presentation.
And in the trade-off, the representative is to offer to complete the application in return from action from the customer.
Yes, I see that.
And in the assumptive final close, the representative is to assume that the response is positive and lead the customer to mandatory confirmation. See that?
Yes, I do.
And then there's tips for final closing, and one of them is to make it clear to the customer that the decision is being made. You see that? And you project confidence in your voice when you're doing that.
But if you see with the sales script, we do have to get a clear yes to that policy to
Yes.
proceed.
But this is about how the sales representatives were conducting themselves in their attempt to get a yes, isn't it?
To be honest with you, I've never done this training, but I do acknowledge it is our training material.
Yes, it's the
But
training.
I don't know how this was conveyed.
Well, it was,
All I can say to you is the standards that we expect of the agents is a high standard.
well, this is what you were conveying to your agents about how you wanted them to do their job, wasn't it, Mr. Howden?
But I don't even know all the answers to those assumptions there and how they were conveyed to the agent.
Well, can we come to what this training told your sales representatives about how to handle objections from the customer? There was significant emphasis placed in this training on how to teach people to actively overcome potential customer objections. Do you agree with that?
Yes, I do.
And if we start at 0085, we see a slide on objection handling. And we see that Select told its representatives that it considered that objections could be a legitimate concern, but they could equally be a signal from a potential customer that they wish to negotiate, that they want more time or require more information, or that they haven't really considered the offer. You see that?
Yes, I do.
And for those reasons, a customer's objections needed to be handled by the sales
correct.
representative. And the key message in relation to objection handling was to present a relevant feature, benefit or aspect of service to help the customer view the product in a different light.
That's correct.
So to distract the customer in order to work around their objection.
I wouldn't call it distract. Sometimes you start a call, often you'll start a call and the client is, firstly all the leads, or what we classify as warm leads as opposed to cold leads, where they've expressed some sort of interest.
So a warm lead is someone who's expressed some sort of interest, is that
That's
what
correct.
you said?
That lead could be lukewarm or it could be very hot because it's inbound from a television campaign. A cold lead is someone that you phone like an external call centre would do. We don't do cold calling, so all our leads are what we classify as warm leads. But often what happens when you start the call, someone will say they're not interested. But once you get into the call, that call will change. And the person will say, in actual fact, that I didn't realise was that affordable. Can I get that much cover? And as the call progresses, it gets better in terms of the client's engagement and identifying with the product. What we have done, though, over the years, and we've changed our objection rule. Previously, we had a maximum of 2 objections per objection to a maximum of 2 objections. And after a third objection, we'll just let the call go.
I want to come to that, what you tell people about how many times they should try and overcome an objection. But can I ask you first, when a customer tells your sales representative at the outset that they are not interested, why not respect that and cease the call at that point?
Because the person would say, potentially, I'm not interested, and the client or the agent might respond to say, how about I just give you a quote and you could see what it's, how much this will cost, and overcome that first objection.
But the customer has said they're not interested, Mr. Howden.
But they expressed an interest initially when we first got the lead.
And then there's a process that commences of attempting to wear them down, isn't there?
I wouldn't say wear it down. It's a maximum of 2 objections per objection.
Well, Select gave its staff a number of tips about how to handle objections, didn't they? We see that from this document.
And again, this was a document that we inherited
I understand.
from another insurance company.
I understand, but
And that was the base of where we started.
it's a document you use to train your staff.
And it has evolved over the years.
Okay, so if we have a look at 0087, we see some objection handling tips. We see that the third tip is to use third-party examples.
That's correct.
Does that mean referring to other customers' experiences?
That's correct.
And another is to link your trial or final close to the next step in the sales call flow,
Correct.
so that a customer can't exit the process, if you like.
The customer can always exit the process, particularly right at the end when you have to get a clear yes to start the policy.
I want to put it to you that you trained people to make it very difficult for customers to exit the process, Mr. Howden.
But it's a clear requirement that we do, and there's various stages. Even when it comes to the banking section, we've got to get a clear agreement from the client to proceed with that section. And at the final stage, we have to get another clear agreement.
We see from this page that you suggested to your staff that at a minimum, they should attempt to handle each objection with 2 relevant objections.
That was the earlier rule that I said, per objection, a maximum of 2 objections to that objection. But if you had a third objection to the same objection, they weren't allowed to proceed with it.
So do I take from that, if a potential customer says they're not interested, that's one form of objection?
Correct.
And you can have 2 goes at
Previously,
trying to turn them around.
yes, you could. Yeah.
And then if they say something else, like, I can't afford this, that's a fresh objection, and you can have another 2 goes at trying
Previously,
to...
yes, you could.
And we see from this document that Select trained its representatives to treat objection handling as a feature of a number of different parts of the call, a number of different stages. Do you agree with that?
I agree that's in the material, yes, I do.
And the material also told your staff that as a final point, they could drop to a lower cost or remove features of the product if a price-related objection was given.
Correct, because often a client can only afford to pay a certain amount.
And can I take you back to the other document, training document that we looked at before, the exhibit to your statement, SAF 0003 0001 0087. And if we turn to 0100, we see there that your staff were told that objection handling is an integral part of your role and will be required on 95% of all calls you make. You see that?
Yes, I do.
And at 120, we see that the general position was the 3 objection rule, which means we can handle 2 objections, and on the 3rd objection, we need to let the customer go and arrange a call back. Or if more appropriately, advise them to call us back.
Correct.
But some objections we see from 0119 didn't count towards the total objection limit.
So this is before you've actually got into the pitch about the product?
Yes. So we see there in the first line, objections are not counted towards the total objection limit during the engagement phase. That is, before the product pitch has started.
That's correct.
And at 118, we see that Select gave specific pointers for some types of objections, such as the I'm not interested objection. You see that?
Yes?
This will be the most common thing you'll hear in your calls, but works slightly differently to other objections. And Select considered that if a potential customer said this, they were not actually giving you a legitimate concern. And as a result, the objection needed to be handled slightly differently to determine why the potential customer was not interested. And then you could turn to the regular process of objection handling. You see that?
Yes, I do.
Now, having gone through those training documents, Mr. Howden, in 2015, when this is how your staff were being trained, you were training your representatives to sell and to sell aggressively.
Again, I would say they were selling to a lead where a client has expressed an interest. And I'm not saying in all cases, all the agents on every single occasion weren't aggressive. I'm not saying that is the case. But they were trained to follow the rules, and the client had expressed an interest in getting a call back. And insurance has to be sold. It's one of those products. It's life insurance. You have to explain the features and go through the price before someone decides to take out that product.
And you trained your staff to be persistent in their dealings with customers in an attempt to sell those policies?
Certainly not of the nature of the call that we heard earlier.
Well, wasn't that call showing compliance with most of this training, Mr. Howden?
I know there were quite a few things there that were, he didn't check with the client. He should have arranged a call back because the client had insurance. He didn't know what type of the policy was. He didn't show any respect to that client. It was terrible. It wasn't a model call.
He was handling her objections though, wasn't he?
He thought he was handling his objections, but he wasn't doing a good job, no.
Was the training that you gave to your staff modified in any way where you were seeking to make a sale to an Aboriginal or Torres Strait Islander person?
Definitely not.
And should it have been?
We as a business, and it's come through in our material, we have never actively targeted the Aboriginal community. It's not a focus of our business.
I'm talking about modifications to assist Aboriginal and Torres Strait Islander people in dealing with your calls.
Given what we heard from Ms. Marika and the cultural sensitivities, I agree there's more care that has to be exercised there. But we wouldn't discriminate against someone if they'd completed an online survey and come through to the sales process. But we don't always know if the person's Aboriginal. We don't ask them at the time of the call.
Yes, and should you ask them, Mr. Howden?
We don't, but if we're allowed to ask them, we would be happy to ask that question.
I see. I'm sorry to have gone a bit later, Commissioner. I thought it might be useful to finish that topic.
Yes. How are we travelling for time?
I think a
Ms. Orr?
9:45 start again would be useful. Thank you, Commissioner.
If I could ask you to be back here in time to begin again at 9:45 tomorrow, Mr. Howden.
Okay.
And we'll adjourn until that time. So,
Mr. Howden, yesterday I had put to you 3 factors as potential contributors to the misconduct by your sales representatives in 2015. The first of those was aggressive sales tactics sanctioned by Select. The second was KPIs and remuneration. And the third was quality assurance and disciplinary framework. Now, can I move from the first of those, which I asked you some questions about late yesterday, to the second, to Select's KPI and remuneration structure? Now, in 2015, Select had a number of KPIs in place for its customer acquisition staff or sales staff.
That's correct.
So sales staff generally had a target of 2 policy sales per day,
That's correct.
in a total talk time of 4.5 hours,
Correct.
and with a dial time utilisation of 75%.
Correct.
What does that mean, a dial time utilisation?
That means that in between breaks that the representatives are making sure they're not idle, they are making phone calls.
So 75% of their time needs to be on the phone, is that what that
Correct.
means?
That's correct.
And there were also commissions payable for the origination of sales.
That's correct.
And was a commission only payable if a sales representative met their KPIs?
That's correct.
Okay. Now, in 2015, we see from your statement that a sales representative would get a commission of between 4 and 10% of the first year's premium for sales that they originated. Is that right?
Correct.
So that meant that adding additional family members under a policy would yield an additional commission.
That's correct.
Now, did Select later change that system because of an understanding that that potentially created a conflict of interest between its sales representatives and its policy holders?
We changed the system because previously it was expressed as a percentage of the premium income. So we wanted to make sure in all cases, regardless of the level of the premium, there was a flat dollar amount paid as opposed to a variable commission.
But why did you want to do that?
That was to stop the potential for policies to have high sums insured.
Can I ask you to look at a document that I showed to you yesterday, which is SAF 0004 0001 0220. This was the internal file note dealing with the investigation of what occurred in 2015. And could I ask you to look at paragraph 10 on page 0221. Could I ask you to look firstly at paragraph 9. Since 2015, Select has made a number of changes that collectively would reduce the likelihood of the factors that led to the sales spike reoccurring and or identifying the emerging trend earlier, including stricter rules around refer a friend. Sales agent remuneration practices have evolved to better align with the interests of customers and Select's commercial interests. Refer further details set out below. And the quality assurance and compliance framework has been evolved and strengthened. And then if we look at what appears below in paragraph 10, we see a reference to remuneration. During 2015, sales agents were remunerated on a percentage of the annual premium income of each policy sale. The current sales agent remuneration arrangements are based on a fixed amount per policy. Adding the coverage of additional family members under the policy no longer results in additional commission. Do you see that?
That's correct.
Now, is this one of the, if we have both paragraph 9 and 10 on the screen, was that one of the changes implemented to better align the remuneration practices with the interests of customers?
That's correct.
Because of a potential conflict of interest that previous remuneration structure created.
But I'd like to point out that certainly with the children, the premium is not a huge component. It's a much smaller component. So proportionally, the commission is a much smaller component.
But nonetheless, you moved, away.
Yep.
Out of recognition that those remuneration practices were not well aligned with the interests of your customers.
Correct.
Thank you. Now, that move to a different commission structure happened in about August 2016.
That's correct.
And from November 2016 onwards, the model was a fixed commission for every policy sale without any additional commission for additional lives insured.
Correct.
So if we come back to the position in 2015, The only basis upon which the Commission would be entirely clawed back was if there was a policy cancellation within the first 30 days.
Correct, or it resulted, if the agent had breaches on his policy,
If the agent had
a breach on his policy,
a breach on his
had
policy,
an incident or breach on his policy, and he lost points to the extent that he didn't qualify for commission. But the emphasis here is when the commission is calculated, it's based on compliant sales. So if the sale's not compliant, he wouldn't get commission.
well, I want to come to how you determined whether sales were compliant and the consequences of a sale not being compliant. We'll move to that when we discuss your quality assurance and disciplinary framework. But sticking with commissions for now, on average, commission comprises about 30% of a sales representative's total remuneration.
That's correct.
And the call-based incentives, these commission-based incentives, aren't the only incentives that apply to your sales agents.
The commission would be your prime incentive. Indirect incentives might be a Coles gift card of $20. It could be $50 at the end of the week.
What do your sales agents need to do to get those Coles gift cards?
Again, the emphasis is on compliant sales, so if they reach their targets and it's compliant, it's not a guarantee that they'll get a card.
So it's about the volume of compliant sales, is that right?
That's correct.
Thank you. Now, you referred yesterday to two particular sales incentive programs that were operating in 2015. One was the Vespa Sales Incentive Program, and the other was a cruise sales incentive program.
Correct.
Could I ask you to look at SAF 0005 0001 0125? Now, before we move to the Vespa and the cruise incentive programs, we see from this document that in 2015, Blue Ink had quarterly awards for which Select representatives were eligible.
That's correct.
And those awards were offered to sales representatives per product line. We see this from paragraph 4, who had achieved the highest productivity after allowing for deductions for policy attrition and quality assurance fails.
That's correct.
And they'd receive a certificate, a trophy, and a $300 gift card.
Correct.
Thank you. I tender that document, Commissioner.
Have we got a date for it, is all?
It is an undated document, but...
Commissioner, this is the latest version.
This is the current version, is it?
Yes.
And we understand from your statement, Mr Howden, that it was also applicable in 2015. Is that correct?
Broadly the same structure, yes.
Yes.
Blue Ink Quarterly Awards 2015 to date, SAF 0005 0001 0125 is Exhibit 4.180.
Now could I ask you to look at SAF 0004 0001 0236? So this is an advertisement connected to one of the two sales incentive programs which you say contributed to the spike in sales in 2015. And we see from the top of this page that this was an all sales agents event.
That's correct.
And the first round of the campaign was specified to run from the 9th of February 2015 to the 29th of May 2015.
That's correct.
And the only rules set out in the advertisement were that the top 10 sales agents with the most points would go through to the final round.
That's correct.
Now, 1 point was awarded to a sales agent per sale.
That's correct.
And there were no restrictions put on the accrual of points, were there?
But there was a deduction of 2 points for every QA fail.
Where do we see that in this document?
It's not in this document, but that was the criteria we had at the time.
Where do we see that in any of the material you've provided to the Commission, Mr Howden?
You won't see it, but in our systems you will see, in our computer systems, you can see that there was a deduction of 2 points.
Well, that's not a matter that you referred to when you explained this sales incentive program in your statement, is it?
Sorry, you asked for the materials, I provided the material.
Yes.
But there was a deduction of 2 points.
And you've not provided any documents to demonstrate that?
It's embedded in the system.
And it wasn't something that your sales agents who received this notice were told by this notice?
It's not specifically referred on the notice,
No.
but it was a requirement.
Well, there's nothing to suggest in this document, which is a 2-page document, if we could have both of the pages on the screen at once, nothing to suggest that quality assurance would play any role in the way the calculation of points for this competition worked.
Every incentive, Ms. Orr, that we've run in the past has always had some form of quality assurance. In
Well,
this particular case, it was built into the system.
How did your employees know that, Mr
Because it was
Howden?
communicated to them
How was it communicated?
verbally at a presentation.
And at a presentation, you say?
And this was launched, there was a verbal presentation.
A verbal presentation. And do you have any documents that show what was said at that verbal presentation?
I don't know.
We see from the second page that the second round of the campaign was to run from the 1st of June to the 30th of June 2015.
That's
See
correct.
that? And Select representatives were authorised to be even more aggressive in that second round, weren't they?
I wouldn't say the terminology aggressive is the correct term.
Well, they were
but they were driven to be more productive in that final month.
driven to be more productive, you say? They were told that points of the top 10 sales representatives were to be reset at 0 for that round.
But it meant that everyone in the final round started on level playing field, still subject to the deductions for QA fails.
The deductions that are not referred to in this document. And we'll see from the subsequent incentive program documents, the cruise one, that there were qualifications of that nature in the material for that program, but not for this one.
I regret that it wasn't specifically mentioned here, but it was embedded in our system.
So we see that the top 10 are going to go head to head, accumulating a point for every sale.
That's correct.
And they were told it's every salesman for themselves.
This is a call centre presentation designed to get the activity up in the call centre.
Designed to sell more products,
Be more productive, yes.
which means selling more products,
Correct.
doesn't it, Mr. Howden? And the winner of this competition is told by this document that they'll take home a brand new Vespa.
That's correct.
Was this a sensible strategy to implement for your sales representatives, Mr. Howden?
The Vespa is another form of incentive. We haven't had another Vespa competition since that one.
You haven't offered a Vespa since,
No.
but you continue to have incentive programs with rewards.
If you look through the material provided, we've had 2 subsequent incentives. Other than that, we've only had commission incentives and indirect small team incentives.
And the trophies and $300 gift cards referred to in the document that I just showed to you before.
But that's a recognition of excellence or service and various other factors that go into it.
You see in this document that was given to your sales agents, Select put a challenge to the sales agents in the form of questions like, who will rise to the top and do you have what it takes? Do you see that language in the document?
I do.
Okay. Was that an appropriate way to incentivise your sales agents, Mr. Howden?
Ms. Hall, when you're running a call centre, you need to have incentives to keep the staff motivated the intent was to keep the staff motivated.
And you accept that this incentive campaign was a contributing factor
I do accept that.
to the misconduct that led to the spike in funeral insurance sales to Aboriginal and Torres Strait Islander people in 2015.
Correct.
And this sales incentive program coincided with the introduction of the Refer a Friend campaign, didn't it?
We always had a Refer a Friend campaign, but during this time that campaign was abused. I did send a correction to the original statement.
I just want to understand that because I'll tender this document before I turn to another Commissioner.
Vespa Sales Battle Rounds 1 and 2, SAF 0004, 0001, 0236, Exhibit 4.181.
Could I ask that you go back to the internal file note about the investigation again, SAF 0004, 0001, 0220, and I'll ask that you be shown 0221 and paragraph 8. Select advised that 2 incentive arrangements, being a boat cruise incentive for the second quarter of 2016 and a Vespa prize that coincided with the introduction of the Refer a Friend campaign, offering gift vouchers to customers, were contributing factors to the spike. Now, is that correct? Were these incentive programs introduced at a time that coincided with the introduction of the Refer a Friend campaign?
No, the Refer a Friend campaign we always had. Yesterday you showed an exhibit.
The flyer?
The flyer.
The Refer a Friend
Correct.
flyer?
But what happened at this time coincided with these incentives, that certain agents chose to abuse that Refer a Friend program.
Well, why is there a reference there to it coinciding with the introduction of the Refer a Friend campaign?
These minutes weren't written by me, Ms. Hall.
Do you say that's incorrect?
It's not incorrect, but the Refer a Friend program did exist prior to that.
So you don't know what's being referred to here as the Refer a Friend program, the introduction of which coincided with the sales incentive program?
It's been badly couched. There was a Refer a Friend program previously, but it did coincide hand in hand, the Refer a Friend program, with the incentive.
In what way did it coincide hand in hand with the incentive?
Because we had 2 agents that saw an opportunity to abuse the system.
All right. Well, the second incentive program that you refer to in your statement as contributing to this misconduct was the sailors' sales incentive.
Correct.
And if we look at SAF 0004, 0001, 0238, we see a presentation for this particular sales incentive program which ran from February to June 2015.
Correct.
The Let's Insure Sailors Sales Incentive. And if we turn to 0241, perhaps if we could just pass quickly through the subsequent pages, 0239. Have we got a pearl of an incentive for you? 240, Meet Pacific Pearl. And 241, we see the prize that was offered was a 4-night cruise from Sydney to the Sunshine Coast return on the Pacific Pearl. That's right?
That's correct.
And we see from 242 that the cruise was over a long weekend and select representatives were given 2 days paid leave to take the cruise.
Correct.
And accommodation and meals and some drinks vouchers were included.
Correct.
If we turn to 248, we see a slide about who qualifies to go. The 10 top achievers qualified to go. With every sale they earning 1 point. Is that part of
That's
the
correct.
sailor's sales incentive?
That's correct.
And at 0249, we see that 3 spots were offered to wildcards. Do you see that?
Correct.
And the wildcards were selected on a number of bases, including ongoing promotion of the incentive. What was that referable to?
It's to make sure that the incentive is still promoted in the call centre, and everyone's aware of the existence of that incentive.
Of this particular incentive program, I see. And then at 0250, we see a heading, what can hinder your chances? Points would only be docked for sales in which commission was clawed back due to one of 5 specified breaches. Is that right?
That's correct.
And these breaches were all quite serious breaches, but they by no means covered the field in relation to serious breaches about which Select would be concerned.
They would account for the majority of incidents that you would have on a call.
The majority of incidents, so they
Analyse the incidents on the calls. These would account for the majority
the main problems, are they?
when it detected.
And the first is not recording the call.
Yes,
Is that
but
what that is?
that's correct.
The second is not giving the general advice warning.
But often incidents occur in pairs. So the general advice warning and this call is recorded, are both contained in the same statement.
Yes.
So invariably you could get 2 in the same.
An omission of any exclusion, so that's a failure to tell the potential customer about an exclusion from the policy.
Or incorrectly describe a feature.
A failure to obtain a clear yes to start the policy.
That's correct.
And a failure to obtain a direct debit authority.
Correct.
And in that instance, if any of those things happened, they'd be deducted 2 points for
That's
every
correct.
incident. So this is an example of promotional sales incentive material that did refer to some consequences for what you would describe as a non-compliant sale. Is that right?
Correct. But if you see the timing of this, it coincided also, there was an overlap with the Vespa. So you can see the deduction for 2 points was articulated in this presentation.
Yes.
But it did coincide also with the Vespa.
Yes, which didn't articulate the 2
Correct.
point deduction.
But it was in the system.
Okay. Now, could I tender this document, Commissioner?
Let's ensure sailors' sales incentive February to June 15, SAF 0004 0001 0238, Exhibit 4.182.
So none of these things would have rendered a sales representative ineligible for the incentive, ineligible for the cruise?
Well, if you make one sale and you have one sale that has one of these things on it, you would go into minus. So you could have 1 and you would go into minus because you get -2.
So you'd have 1 and you go
For
into...
every sale that you make that's compliant, you would get 1 point. If you made a sale which had one of these incidents on it, you would lose 2 points.
Why not be disqualified from the cruise altogether if you engaged in any of this serious conduct?
Because sometimes these are isolated and they're not intentional.
Wouldn't that have sent a message if you rendered
Well, I think
people...
if you're getting a penalty deduction of -2 points, so that means one sale that you made is compliant, the next one that you make is not compliant, straight away you get a penalty because you're going to minus.
So is the satisfaction of these 5 matters, recording the call, giving the general advice warning, explaining exclusions properly, getting a clear yes to start the policy and getting a direct debit authority, is that what makes a call a compliant call?
No, it doesn't.
So these are just some of the criteria for a
These were the
compliant book.
criteria for this particular incentive.
Okay. Now, there were other breaches that Select was, and other potential breaches that Select was concerned about at this time, weren't there?
What do you mean by that, Ms.
Well, can I show you your 2015 compliance manual, which is SAF 0009 0001 0057. This is your 2015 compliance training manual.
That's correct.
And if we turn to 0072 within that document, we see that Select was concerned about its representatives not engaging in misleading and deceptive conduct. That was something you were aware of and trying to guard against?
That is part of the compliance manual. Yes, it is.
Is it something you were aware of as a risk and which you were trying to guard against?
As a business, we all try and guard against risk like that.
Risk like your sales agents misleading or deceiving people?
Correct.
All right. And we see on this page a breakdown of things that could amount to misleading and deceptive conduct, a breakdown into acts, omissions and silence. You see that?
That's correct.
And your sales agents were told that acts were actively doing something that is misleading. This is the most common, such as telling someone the wrong benefit.
I think to take us out of context, this is a statement about the industry which is embedded in our compliance manual.
Yes. All I'm trying to demonstrate, Mr. Howden, is that you were aware of the risks of your sales agents engaging in misleading and deceptive conduct, and your compliance materials reflected that.
It was an expectation that they adhere to that, yes.
Yes, and on the following page at 0073, you were also aware of the risk that your sales agents would engage in unconscionable conduct. You see that there?
Yes, I do.
You told them about what unconscionable conduct was.
Correct.
And we see there that there's a particular reference to potential unconscionable conduct in relation to Indigenous people.
That's correct.
Yes. So these were your expectations, that people didn't engage in misleading and deceptive conduct or unconscionable conduct, particularly towards vulnerable people and Indigenous people.
That's correct.
So why not include in any of your sales incentive criteria an element which required your sales agents not to engage in misleading or deceptive conduct or unconscionable conduct?
With the benefit of hindsight, we would have added more criteria to that.
But it didn't end up, if you found that your sales agents had engaged in misleading or deceptive conduct or unconscionable conduct, that wasn't one of the factors that would lead to a docking of their points for the incentive program.
Not directly on this presentation, but indirectly it would do. I need to stress that if, whilst it's not in this document, if any agent engaged in misleading conduct and it was severe, we would dismiss the person.
Well, weren't these incentive programs a good opportunity to remind people of their obligation not to engage in misleading or deceptive conduct or unconscionable conduct, while at the same time you were whipping them up to sell more and more of the policies?
I personally wasn't whipping them up, to use your words. I think the sales manager was doing that job.
Well, the language
But
on those...
I agree with you in the language and hindsight. We should have been more specific.
You were pitting your sales agents against each other in battle to affect...
That's sales jargon, that's all.
And it has an impact, doesn't it, Mr. Howden? It has
In
an
hindsight,
impact.
I agree with you. We should
Yes.
have changed that.
Now, I'll tender that document, Commissioner.
Select AFSL Compliance Training Manual 2015 SAF 0009 0001 0057. Exhibit 4.183.
Now, there was a similar campaign in the first quarter of 2016 relating to a trip to Las Vegas, is that right?
That's correct.
And if we turn to SAF 0005 0001 0109, we see a slide pack for the Las Vegas incentive program from January to March 2016.
That's correct.
And if we turn to page 0113, we see that the prize in this incentive program was a paid holiday to buzzing Las Vegas, Nevada, USA, 24-hour casinos and endless entertainment options. Now, this was a 7-day holiday to Las Vegas.
That was actually 4 days and 2 days in travelling.
Yes, I see,
Yeah.
with 4 days of paid leave.
Correct.
And flights were included,
Flights were included.
and bed and breakfast in a glitzy hotel was included.
Yes, but I can specify that the total cost per head was 1,900.
You gave the winner a $500 cash card.
Correct.
Okay. And it was for top sellers, this incentive program, wasn't it?
There were also some invitees from service departments, if you look at the list.
Yes, well, if we look at the list at 119, we see the best agent from each team, the top 5,
That's correct.
the top 2 team leaders,
Correct.
and 2 wildcards.
That's correct.
And the qualifying criteria are at 0120. For sales agents, it was the top 3 per team based on the number of sales. They went through to a final of 15 finalists.
Correct.
And again, as we saw with the VESPA program, there's a resetting to make the competition even harder at the second stage. All finalist points reset to 0 at beginning of March and race begins.
Correct.
Person with the highest sales per team wins.
That's correct.
And at 0121, we see the qualifying criteria for team leaders. The top 2 team leaders based on number of sales at the end of March. You see
Correct.
that?
Yeah.
And in this one, at 123, we see the terms and conditions showed deductions for quality assurance fails and behavioural issues. What were the behavioural issues that would lead to a deduction, Mr. Howden?
Behavioural issues relate to staff that arrive late at work or
I
take
see.
excessive sick days.
So that was about punctuality
Correct.
and sick leave. All right, I tender that document, Commissioner.
Let's ensure first quarter 2016 incentives, SAF 0005 0001 0109, Exhibit 4.184.
Now, I want to move on from KPIs and incentive programs, Mr. Howden, to the third matter that I put to you yesterday, which was an inadequate quality assurance system and disciplinary processes. Now, having gone through the materials I've put to you in relation to the sales tactics that were sanctioned by Select, and the incentives that were made available to sales agents at this time, do you think that your quality assurance program in 2015 was sufficiently robust to deter Select sales agents from making inappropriate sales?
At the time, we did believe that the procedures we had in place were sufficient.
But they weren't, were they?
Well, the 2 agents that you referred to, well, I refer to were responsible for the abuse of the referrals. If you look at the other calls that they made, there were no issues with those. They weren't people that were regularly failing. They were senior agents. So there was nothing to suspect that they would have abused the system.
That's the point I want to come back to. They were senior sales agents, weren't they, Mr. Howden? Now, can I ask you what you would describe as the key features in relation to deterrence of your quality assurance regime at this time?
Well, depending on the severity of what's happened, it could result in a loss of points, it could result in a loss of commission or dismissal.
I'm sorry, I want to move to consequences. I'd like you to firstly consider how your quality assurance program deterred people, stopped them, prevented them from engaging in the sort of misconduct that we see.
Well, the intent is there for the agents not to engage in misconduct. And if they do engage in misconduct, there will be consequences, either loss of commissions or disciplinary actions.
So the intent was that they not engage in misconduct. What I'm trying to get to is what you did to ensure that they did not engage in misconduct.
Well, we did regular listening of calls. We took a sample. Depending on the agent's tenure, the more junior agents had a higher percentage of sales listened to. The moment we detected an incident, we straight away investigated it. We discussed it with the staff member. We listened to additional calls for that staff member to see if there was a pattern there.
So you listened to a random selection of calls, is that right?
That's correct.
And you focused primarily on the calls conducted by junior sales agents?
We had more calls with respect to junior agents versus senior agents.
Yes.
But if we picked up a problem with a senior agent, we would naturally extend the sample for that senior agent.
But your sampling tended not to include calls from your senior agents?
No, it does.
As much as the junior agents?
There's a higher initial assumption is the junior agent, because of training, getting familiar with the product, the more experience you have, the less likely you are to make silly mistakes. So it makes sense that for a junior agent that you would have a higher proportion of their calls listened to.
I see. So your compliance manual that I took you to before, the 2015 compliance manual, it was amended in February of 2015 to include an example quality assurance marking sheet. Is that right?
That's correct.
And so prior to that time, your compliance manual didn't have a quality assurance marking sheet?
It wasn't in the manual, but there was a separate scorecard which we have provided you with.
Okay. So outside of the manual?
Correct, but there was a scorecard.
Can we look at the one in the manual from February 2015, which is SAF 0009 0001 0057. And if we turn to 0081, we see the quality assurance marking sheet. We might just need to blow this up a little bit. So this was the marking sheet for the calls that you were listening to, is that right?
That's correct.
And this was applicable to sales from the 19th of February onwards, is that right? Do you see that date up the top in the right-hand corner?
That's correct.
And the quality assurance marking sheet doesn't specify any points attributable to any of these categories?
There are points behind this, but I don't have those with me.
Well, what we see is the word fail appearing at several points for things like, is the call recorded? Has a general advice warning been given? Was a recorded product disclosure statement played? Did the customer give a yes to the policy? So these were all categories that were binary, weren't they? They were pass or fail.
That's correct.
So if a sales representative failed for one of the binary categories, what was the consequence?
We would listen to that call. And as I said, often incidents do occur in pairs. We'd find out why the agent hadn't admitted it. Sometimes what would happen is, they might mention the cover, but they would forget to mention in the first 12 months there's an accident-only period, stand-down period. So depending on what it was, we would provide the agent with coaching and feedback on that call.
So you would talk to them to find out why they had failed, and you'd give them feedback and coaching?
That's correct.
Okay. Then in January 2016, the quality assurance framework was amended to introduce something that's referred to as a phone licence. Is that right?
That's correct.
And that was a system for recording points against a sales agent for particular offences, referred to as offences in the document. And each offence carried a particular weighting depending on the severity of the offence.
Correct.
Okay. And that phone licence system became a part of this compliance manual in May 2016.
Embedded in the manual, yes, but prior
Yes.
to that it was outside the manual.
Well, that phone licence system wasn't outside the manual, was it? The phone licence system with these points came in May 2016.
I'm not sure of the exact introduction.
Can I take you to the compliance training manual that you've annexed to one of your statements? It's Exhibit 9 to your statement in response to Rubric 431, SAF 0003 0001 0247. So this is a later version of the compliance training manual
Yes, it is, because it's version 2.
that operated from May 2016. We see that if it assists Mr Howden on the second page, 0248. See there that this
This
is a...
version was launched on the 26th of February.
I see. No, 26th of February 2015,
15,
there was
yeah.
a previous version, which is the one I've taken you to earlier.
2.1 on the 18th of May.
18th of May is the version, 2016 is this version. And we see at 0272, the revised quality assurance marking sheet.
Yes?
And over the page at 273 to 274, we see an explanation of Select's new compliance disciplinary framework. And we see at the top of that page that the framework or phone licence will record points against agents for corresponding offences, and each offence will be carry a weighting dependent on severity.
Correct.
Now, there were a few key features of this disciplinary framework. The first was that the breaches for each call weren't cumulative, so that agents would only be penalised for the most significant of the breaches on a particular call.
That's correct.
And agents were allocated a maximum of 30 points,
Correct.
and points were deducted at the time of the offence,
Correct.
and they'd return back onto the phone licence after a period of 6 weeks.
They could regain those points, yes.
After 6 weeks, they went back on, didn't they? And that was said, we see from this document, to ensure that agents would continue to exhibit good behaviour moving forward.
Correct.
And new representatives had a grace period of 2 weeks before any points would be deducted.
Correct.
So that was the system.
That was the system, yes.
Was it adequate to only take the worst breach from a sales agent's call?
Well,
so that
you could have various minor incidents on a call, incorrect spelling, incorrect recording of address. All of those would count. So you could have multiple offences on the same policy, but if the severity of the biggest event was the most important. So that's why there was a maximum of 10 points per call.
Why was there a maximum of 10 points per call? What if there were multiple very serious breaches on a single call?
If that was severe enough, we would take disciplinary action against that agent.
Well, you wouldn't know, would you? Because you'd only assigned 10 points to the agent for the misconduct during that call. And they
We most definitely would know, Ms. Orr, because there's a QA agent listening to that call.
And assigning points for the
Assigning
purposes
points,
of
but
this
if the
framework.
call was not of the standard that it should be, we would investigate that straight away.
Well, where do we see that in your compliance disciplinary framework? Some additional layer of investigation?
It's a matter of business practice.
I see. So for the purpose of the points under the phone licence, you chose the most serious breach and allocated points for that, only to a maximum of 10 points. And then 6 weeks later, all points were returned.
That's assuming you still had points 6 weeks later, yes.
Yes.
Yeah.
Well, if you did, they were returned.
Correct.
The residue were returned. Now, if we look at the table under the heading Action to be Taken on this page, we see the consequences of losing particular numbers of points. So if you got 7 points in 6 weeks, a file note was written. Do you see that?
As soon as you got to 7 points, you would get a file note, yes.
You'd get a file note.
Correct.
And if you got 10 points in 6 weeks, you got a formal warning.
Correct.
And if you got 20 points in 6 weeks, you'd get a second formal warning.
Correct.
And if you got 30 points in 6 weeks, you'd be dismissed.
You've lost your licence, yes.
And does that result in
dismissed.
dismissal?
Once you've lost your licence, you're dismissed.
So if we look also at the compliance disciplinary table under that, we see how points were attributed to certain offences. Do you see that?
Yes, I do.
And perhaps if we could, that's a table that continues onto the second page, so perhaps if we could have blown up both parts of that table, we see that prompting a customer to say yes. Do you see that in the lighter grey portion, third from the bottom? Prompting a customer to say yes.
Yes,
Attracted 3 points.
I see that, yes.
And customers not giving a clear yes to start a policy attracted 5 points.
Correct.
And failing to explain key exclusions also attracted 5 points.
Correct.
And applying pressure selling tactics attracted 7 points.
I see that.
And if you made misrepresentations or provided misleading information, that was 10 points.
Correct.
If you completed an unethical sale, that was also 10 points.
Correct.
And if you provided personal advice, which would be a contravention of the Corporations Act, wouldn't it?
Yes, it would be.
Yes, so if you did that, you also got 10 points.
Correct.
So you had another 20 points to live with until you made it through for the rest of the 6 weeks, when all of your points would be returned.
But you're taking out of context, because you're taking one example, but it doesn't mean that we don't listen to further calls for that agent. So it doesn't take 6 weeks for us to realise that there's a problem. We would automatically give feedback to that agent, and we'd listen to more calls for that agent. So if we listen to additional calls and we found more repeats of 10 points, they all could have occurred that same day. And if they all occurred the same day, we would dismiss that agent.
But under your system, one of your sales representatives could complete 2 unethical sales every 6 weeks without being terminated.
If you look through our register, we didn't have that many unethical sales.
Well, but your system that you had in place to provide consequences for misconduct permitted your sales representatives to engage in 2 unethical sales every 6 weeks without being terminated.
But if you engage in unethical sales, it wouldn't take you 6 weeks to get dismissed.
Well, that's a rather big assumption,
I've got to remind
isn't it?
you of go back to that point. If you get a breach of 10 points, we would automatically listen to more calls. So it doesn't take 6 weeks for you to lose all your points. But if it was just isolated to that one call, and the other calls we listened to didn't have the same behaviour, yes, it may take 6 weeks and then you'll get back those points.
Yes, so 1 unethical sale is okay, and in fact 2 unethical sales in 6 weeks.
No unethical sale is okay, but we have to allow the agent some room to move. If we had to fire everyone for every infringement.
For every unethical sale?
We don't have many unethical sales, but if we had to dismiss someone for every case where we thought it was an unethical sale without giving them a chance to explain why they did it or listen to further calls, it would be an unfair system to the agent.
So under this system, your sales agents could engage in 2 sales that involve misrepresentations every 6 weeks and 2 sales involving the provision of personal advice.
That's what the scorecard says. But if an agent, I've got to re-emphasise that point, if an agent was doing something that he shouldn't be, we would automatically listen to an extended sample. And if that behaviour was manifested itself in other sales, we wouldn't wait for those 6 weeks.
Why was it appropriate to wipe the slate clean every 6 weeks?
I suppose similar to a driver's licence. You know, if you never got back the points that you lost on a driver's licence, there would be no incentive. You've got to get the balance right in ensuring that we do take appropriate action. But if the agent realises that he's got no, very unlikely that he's going to get his points back in the future, it could drive, conversely, bad behaviours, because he could be driven to write a sale that he shouldn't, and then subsequently leave us.
I tender this document. Oh, I'm sorry, I don't need to tender this document, Commissioner, because this is attached to your statement. What I want to ask you, having now gone through this document, Mr. Howden, is whether you consider that your quality assurance regime in 2015, which is prior to this regime we've been looking at, prior to the phone licence system with the allocation of points, was your quality assurance regime in 2015 sufficiently robust to deter your sales agents from misconduct?
At the time, we did believe that the system we had in place was sufficient. Like all other systems, that they have evolved over time.
Do you believe that now, Mr. Howden?
I believe on the calls that we've listened to in 2015 and the programs that we had in place, they were adequate at the time based on the samples that we took.
They were adequate at the time?
Correct.
Even though they did not prevent the misconduct which we've been discussing?
Again, I've got to draw it back to those 2 agents. For those 2 agents, regrettably, we didn't pick up that pattern.
And therefore, your systems were not sufficiently robust to deter the conduct?
For that portion, yes, they didn't pick it up, yes.
I want to turn to how your
Before you do, Ms. Orr, can I just understand this? Does it follow from the evidence that you have given that giving personal advice, which is a breach of law, was not treated by your organisation as grounds for dismissal?
We would listen to what that breach of personal advice is. Sometimes an agent might mistakenly offer an opinion, which is strained to become personal advice. It was not the agent taking into account the client's needs and giving the personal advice in the truest sense.
Does it also follow from your evidence that an agent making an unethical sale was not treated by your organisation as ground for dismissal?
Depending on the nature of that call, it could be treated as grounds for dismissal.
Well, that suggests there are grades of unethical. You'll need to explain that to me, I think, Mr. Howden. Either the sale's unethical or it's not, isn't it?
When we classify something, Commissioner, as unethical, Mrs. Marika's example yesterday was just not a good example, full stop. That's why we dismissed the agent. Sometimes a call will start, initially would be marked as potentially being unethical, but as the call progresses, it becomes accepted to the client. The client actually says, yes, I do want this policy. We would then follow up with a follow-up call to make sure that the client is happy. If the client was not happy, or there was that call didn't get any better, we would dismiss the agent.
Yes.
I want to ask you some questions about how you administered this regime back in 2015. We see from documents provided to the Commission that your target, Select's target at that time, was to monitor approximately 4 calls every week for representatives who'd worked with Select for less than 6 months. Is that
Correct.
right?
Yep,
And about 2 calls a week for more experienced representatives.
that's correct.
And that resulted, we see from the documents, in a bit over 10% of all calls being monitored.
For funeral insurance, yes,
Yes, only 1 in 10 was listened to.
correct.
And we see that throughout 2015, that differential standard for how many calls would be listened to for junior and senior sales representatives continued.
Correct.
And that lack of quality assurance for the more senior representatives was part of the reason that it took so long to identify the misconduct of the 2 sales representatives, wasn't it?
That's correct.
Because they were senior sales agents, the 2 who were responsible for generating the largest proportion of the referral leads that we've discussed.
Correct.
And their mis-selling is described in a number of Select documents as the root cause of the spike in sales of funeral insurance to Aboriginal and Torres Strait Islander people in 2015.
Correct.
But we see that by February 2017, your organisation still hadn't worked out an adequate approach to quality assurance frequency for listening to calls of experienced sales agents.
I'm not sure why you make that assumption.
Well, can I show you a document which is SAF 0004 0001 0220. Now, this is back to the file note dealing with the investigation. And could I ask you to look at paragraph 14 at 0222. So this document is from February 2017.
Correct.
And we see that at that point, the parties are discussing establishing regular periodic reporting of the point status of sales agents and termination statistics and the broader quality assurance process findings and effectiveness, and that an appropriate approach is to be discussed and agreed. An outstanding question will be working out an adequate approach to quality assurance frequency for the experienced sales agents, given the root cause of the spike. So you still didn't have an adequate approach to monitoring the activities of your more senior sales agents by February 2017.
I think the introduction of the licence system certainly helped us to establish trends because that was all available on the system. And we were able to establish trends. We were able to, where appropriate, listen to more calls for senior representatives.
Well, it helped, but it wasn't enough, was it? Because you still hadn't worked out an adequate approach to the frequency of calls that you should listen to for your more senior sales agents.
I agree, that's what that document says.
All right. And you agree that that was the case?
I agree that we've got limited resources. We do make every attempt to make sure we pick up behaviours.
And you agree that this document records that you had not made sufficient attempts by February 2017?
I wouldn't say sufficient attempts. We've been consistent if you look at our compliance methodology, and we've made constant involvements to all of those processes over the years.
Well, before I leave the topic of your sales processes in 2015, I want to ask you a few questions about the ways in which you ensured that your sales agents complied with Section 992 capital A of the Corporations Act, which is referred to often as the anti-hawking provision. You're familiar with that provision?
Yes, I am.
You refer to it in some detail in your statements. Is that right, Mr. Howden?
That's correct.
And you tell us at paragraph 24.1.6, subparagraph G of your first statement,
Which rubric is this?
that's rubric 423,
Which point again is that?
24.1.6, subparagraph G.
Yes.
You tell us there that section 992 capital A 3E of the Act, read with regulation 7.8.22 capital A of the Corporations Regulations, means that select representatives were required to satisfy themselves that the customer had agreed to receive a product disclosure statement over the phone.
Yes.
Yes. And Select received legal advice to that effect in July 2013.
That's correct.
You've seen a document that records that you were advised that if the person agrees that you can provide the PDS over the telephone, and if you are satisfied on reasonable grounds that they have received the statement, you can do it. This must occur before they become bound to purchasing the product.
Yes.
That was the nature of the legal advice that you received in July 2013.
We did receive subsequent advice to that.
What was the subsequent advice to that, Mr. Howden?
That's under legal privilege.
I see. So you've waived legal professional privilege over the earlier advice, but not
That
over
was
the
the document that initial opinion that we got.
Yes.
And then we got legal advice subsequent to that.
Yes, and you maintain legal professional privilege over the second advice that you received.
Correct.
And when was that second advice received, Mr. Howden?
It was received shortly after that.
Well, how long after that?
I'm not sure of the exact date. But
In
shortly after.
2013?
Correct.
So in July 2013, as a result of the first legal advice, you understood that it was a requirement of providing an oral product disclosure statement to potential new policyholders, that you obtained their consent to providing the product disclosure statement in that way.
We had the opinion that was an acceptable way of delivering a verbal PDS during the call, but at the end of each call, the client would get the PDS and the FSG. So there was a pre-recorded section in the call where an oral PDS and financial services guide was played to the client.
Okay.
That was similar to what other operators in the market were doing at the time.
I see. Well, could I show you your scripts from that time? ASIC 0025 0003 1212. So this is a script used by Select in 2015.
That's correct.
We see that it's effective from the 25th of August 2015 to the 23rd of September 2015.
Correct.
And we see, if we move through the script to 1214, in the section payment details, before I continue, I need to give you a product disclosure statement. I will play it to you now, and it will take about 2 minutes.
That's correct.
That was the guidance that your sales representatives were given at this time about playing the product disclosure statement.
That's correct.
So there's nothing in this script, is there, that suggests that a potential new policyholder was asked for their consent to receive the product disclosure statement in that way?
The legal advice that we got was the statement there telling the client that we would be playing it, and it's recorded in the script.
Yes, but my question to you was whether there's anything in this script that shows that a potential new policyholder was to be asked for their consent to receive the product disclosure statement in that way. I just want to make sure you understand the different issues here. One being the permissibility of delivering the product disclosure statement orally, and the second being the obligation to receive the consent of the potential customer to receiving it orally.
I think I don't have the script in front of me of that recorded message.
Well, this is the script, and I'm happy to show you each page. I believe it's a document that was shown to you, or perhaps it may not have been. It was a
Can we look at the verbal PDS? Is that shown in the script?
Yes, we can. It isn't part of your script, the product disclosure statement, but we might be able to nonetheless find the document containing it and bring that up on the screen for you. But the only reference to the product disclosure statement in the script is the reference on this page under the section payment details.
I know the reason why I asked, there could be a wording in that script which gives you the satisfaction that you're after.
Well, can we just come back to what you say about about this in your statement as well, Mr. Howden? I'll tender this document first, Commissioner.
Let's ensure product script 25 August 15 to 25 September 15, ASIC 0025 0003 1212, Exhibit 4.185.
And just before we move away from this document, can I show you 1215, which is headed Recorded PDS and FSG? Do you see the red text there?
Yes, I do.
Now, is that the text of the product disclosure statement?
That's the product disclosure statement, which we received legal advice was at the time.
You received legal advice was?
That would be sufficient to play the abridged verbal PDS.
I see. So that's about the content of the product disclosure statement that can be delivered orally over the phone. You accept, don't you, that a customer needed to consent to receiving the product disclosure statement in that way?
I think if at the very bottom it was, please can you confirm that you have received and heard this message?
Well, that's not asking for the consent of the customer to receive the product disclosure statement in that way, is it?
Again, Ms. Orr, at the time we received a legal opinion at the time. We acted on that opinion.
Well, I just want to come back to what you say in your statement about this, Mr. Howden. If we could go to 24.1.6 subparagraph G within your statement in response to rubric 423. You have that there? I'll read it to you again. You said, in accordance with section 992 capital A 3E, as modified by regulation 7.8.22 capital A, the caller was required to satisfy himself or herself that the customer had agreed to receive the PDS over the phone and to be satisfied on reasonable grounds that the customer had received the PDS. There's two different elements to that, aren't there?
Yeah, I think, and again, I'm not sure of the exact details, but this could be that we got that consent at the time that the lead was generated.
You think you might have got the consent from the customer at
potentially.
But do you have
Can't say definitively.
Do you have any basis for thinking that that had occurred?
Well, the author that wrote this responded in detail to this point. He responded to all these sections. It is part of my statement, and I accept that. But the person that compiled this...
I'm sorry, the person who compiled what?
The person that compiled all these responses here to these sections.
Do you mean the person who compiled this part of your statement? Is
correct. That well, I accept it's my statement, but the responsible manager that we had that looked through each of these points and responded to each of these sections would have taken into account all the requirements of the various acts.
So did you satisfy yourself of these matters, or did you rely on the responsible manager?
I have no reason to believe at the time, well, I had no reason to believe at the time that they were deficient.
Right, but did you satisfy yourself? This is your statement, not your responsible manager's statement.
Accept that.
is paragraph 24.1.6 G correct?
It is correctly recorded, yes.
Okay, so you accept that there was an obligation on the part of Select to have your sales agent satisfy themselves of two things: that the customer had consented to receive the product disclosure statement over the phone, and that they had in fact heard the product disclosure statement that was delivered over the phone.
Well, it's definitely the second component is there at the end of that script.
Yes, but not the first, is it, Mr. Howden?
I'm not sure if it's at the very start of the script or...
Well, I'm happy for you to look through that document in detail, the script, and see if you can identify a part of it where there is a requirement for the sales agent to satisfy himself or herself that the customer had agreed to receive the PDS over the phone. Would you like the opportunity to look at that document?
If you could bring it up on the screen, yes.
Yes, ASIC 0025 0003 1212. You see anything?
Could you go to the next page, please?
Yes, 1213. We have a hard copy that we could also provide to assist the witness with this, Commissioner. I can hand that to you, Mr. Howden.
You can go to the next page if you want.
1214.
Yeah, Ms. Walsall, there's two parts here just before the payment detail.
Yes,
Referring to the fact that we will be playing it,
we will be playing it.
the verbal PDF.
Yes, that's the section on the screen at the moment. I will play it to you now, and it will take about 2 minutes.
And at the bottom of that script, you will see there's a section in green, which is further reference to the PDS.
At 1215, the PDS you will receive contains details of our privacy statements and how we deal with your
Right.
personal information. Are you happy to read those privacy statements yourself?
I think there's an assumptive statement in here.
What's the assumptive statement, Mr. Howden?
We're saying to the client we will be playing you the PDS and then you will receive a PDS after this. Again, the script at the time would have been approved and signed off. I don't have all the material in front of me now to answer specific questions.
Well, I want to put to you that your sales agents who complied with this script were acting in contravention of section 992 capital A of the Corporations Act because they were not being directed to satisfy themselves that the customer had consented to receiving a PDS in oral form in the telephone call.
Again, Ms. Hall, at the time we received legal opinion and we acted with the intent of...
And you're talking about the second legal opinion, the one that you maintain legal professional privilege over.
Correct.
Not the first legal opinion.
The first one led to the second one, and we got additional legal opinion.
I see. I tender this document, Commissioner.
Haven't we marked it as Exhibit 4.185, I think?
I'm sorry, Commissioner,
Yes.
we have. Now, can I move to the detection, Mr. Howden, of the misconduct by the sales agents in 2015? You investigated the spike once it had been identified by St Andrews.
That's correct.
Did your investigation adequately identify all mis-selling to Aboriginal and Torres Strait Islander people?
We did, as a result of that, we did a review, extended that to all the referrals in those postcodes. and we picked up, there were in total, I think the initial number was 622, and then on further review, the final number was 641 in those postcodes.
641 what?
Referral sales were made, and we listened to all of those calls to make sure they were compliant calls.
So did your investigation adequately identify all Aboriginal and Torres Strait Islander people affected by this sort of misconduct in this period?
Again, we don't have records of who Aboriginal or Torres Strait Islanders are. We were guided by the postcodes that were referred to us, and we assumed that everyone in those postcodes were Aboriginal or Torres Strait Islanders.
So you didn't identify the mis-selling to Ms Marika?
Because she wasn't on that postcode.
And after your first investigation, there was an internal review that you've referred to of the sales practices of the two particular representatives.
That's correct.
And when did that review conclude?
Well, I think that we were notified in October, and I think it was towards the end of that year that we picked up, we had the analysis of those agents.
So your internal review went on till June 2017, didn't it?
Oh no, we had to listen to all the calls first. So
Yes.
the first part was to identify
Yes.
statistically who we should be listening to.
Yes.
So that we completed first,
And
and then we had to listen to all of those calls,
And that took till June 2017?
as well as agreeing on the format and the extent of the remediation.
Well, after your internal review, you terminated the employment of the two sales representatives of which we've been speaking.
Sorry, what is that question again?
After the review, did you terminate the employment of the two sales representatives?
We had to listen to the calls first.
Yes, I understand that. So after the review, which involved
Correct.
listening to the calls,
Yes.
in June 2017, did you terminate the employment
Yes, we
of the
did.
two sales representatives? And you sent them termination letters?
We called them and had disciplinary hearing, and yes, we gave them a
You gave them a termination letter, and in that termination letter you told them that there was no doubt in the company's mind that they had failed to act with the utmost good faith by taking advantage of people in the postcodes with the high proportions of Indigenous clients. You recall that?
Yes, I did.
Now, was it your view that having terminated those two sales representatives, you'd effectively dealt with the mis-selling issues?
Well, we knew that we had to certainly look at the referral program, and we stopped that referral program.
Yes.
And we had an active monitoring of those postcodes going forward, to the extent that we actively try and carve out those postcodes.
In what way do you carve them out?
In terms of lead generation activities, if it's online, we would say we don't, to the extent that online survey requires a postcode, if certain postcodes fall within that band, we don't want any leads from that postcode. If we get data and we know in the data we've also got postcodes, we'll wash that data through those postcodes to exclude those postcodes from the data that we may dial. We'll give to a lead provider to dial on our behalf.
So you made a decision to stop selling your policies to people who lived in those postcodes. Is that what you're saying?
Yes, we did.
I see. Now, throughout the investigation of this misconduct...
It was not to not sell to the people in those postcodes, but we wouldn't actively target those postcodes.
But your sales model involves identifying a person as a potential customer, doesn't it?
Yes, but we don't always know at the time of the call which postcode they're from.
Mm-hmm.
And we don't know at the time of the call, in all cases, whether the person's Aboriginal or Torres Strait Islander.
So do I understand that where the information you received about a potential customer identified that they lived in one of those postcodes,
Yep.
you did not proceed to attempt to sell them a product thereafter?
No, if the client, if a person has come through as a lead, notwithstanding those filters that we do have, we will go through that product. We won't discriminate against that person.
I see. If the customer approaches you, you would proceed with the sale?
Or if the customer said, please give me a call back because the lead
Yes.
provider, yes.
Yes. But you wouldn't seek out otherwise?
We wouldn't actively target them.
Yes, I see. Now, throughout the investigation of this misconduct, Select had been talking to St Andrews and talking to ASIC. Is that right? And your investigation concluded on the 2nd of January 2017. Do you recall that? You have the review that finishes in June 2017, which involves listening to the calls. But the first part, the investigation to identify the cause of the spike, concludes in January 2017.
The first results were available in January 2017.
Yes, you tell us in your statement that they were available on the 2nd of January 2017. And on the 17th of January 2017, St Andrews made a voluntary disclosure to ASIC about the mis-selling.
Right.
And just prior to this, ASIC and Select had been corresponding about ASIC's concerns that Select's telephone sales processes contravened the anti-hawking provision. Do you recall that?
Yes, but that was in relation to a different brand, and we responded to that.
But ASIC had been communicating with you about those concerns
Right.
about breach of the anti-hawking provision.
Correct.
Now, you tell us in your statement that when St Andrews made the disclosure to ASIC on the 17th of January 2017, it did so with Select's knowledge and cooperation.
They informed us that they would be having a meeting with ASIC, and we acknowledged that.
That was what you meant when you referred to your knowledge and cooperation? But your opinion, Select's opinion at the time, was that the matters that were raised by St Andrews didn't indicate a likely significant breach of your obligations under the Corporations Act.
We hadn't listened to the calls yet, so we couldn't determine the extent of the mis-selling.
Mm-hmm.
Only after we listened to the 641 that we concluded that there were 240 sales that shouldn't have been made.
I see.
But the other sales, whilst they had been made to those postcodes, were compliance sales.
So that's why 5 months after the disclosure by St Andrews in January 2017, your disclosure to ASIC happened in June 2017.
Yes, I did.
And the letter by which you made that disclosure to ASIC is Exhibit RH15 to your first statement, SAF 0002 0001 0222. Thank you. We see there from paragraph 5 that Select maintained its position that there'd been no significant breach of its obligations under the Corporations Act.
In terms of the significant test, yes.
But you said that for an abundance of caution and to assist ASIC in its consideration of St Andrews' disclosure, Select provides this letter to complement the report by St Andrews to ASIC in relation to its investigation into the spike.
Correct.
So, having maintained the position that the mis-selling issue was principally due to the conduct of the two sales representatives, we see from this letter at pages 0225 and 0226 that you went into some detail in the letter to identify why you thought there had been no breach of your obligations under Section 912A, or if there had been a breach, why the breach wasn't significant. You see that?
Yes, I do.
So we see there that your investigation in paragraph 23 is described as having shown that the referral practices were the main cause, and no evidence was uncovered to suggest that the sales of the products were made dishonestly or unfairly. Then we see a reference to the two representatives responsible for the bulk of the affected sales in paragraph 24.
Correct.
And then at 26, we see that for those reasons, you conveyed to ASIC that you considered that if any breach occurred as a result of the increased sales of funeral products in the relevant postcodes, it was not significant. Nonetheless, we have reviewed and will take remediation action in accordance with the guidelines set out in RG 256.
But you haven't read out point 25.
Yes?
Point 25, 1 says, we have not had a large number of frequent experience of similar issues with other of our representatives.
Yes,
And they
so-
were isolated to two.
So this was your reasoning as to why this wasn't a significant breach?
Overall, yes.
Yes. But we see that you told ASIC that you were going to undertake remediation action nonetheless.
Correct.
And shortly after this, you met with ASIC,
That's correct.
and we see from Exhibit 16 to your statement, SAF 0002 0001 0227, that after that meeting, ASIC corresponded with Select, and we see from paragraph 3 that ASIC expressed concerns that regardless of your characterisation of the issues, Select had in fact breached the general licence obligations set out in section 912A and the consumer protection provisions of the ASIC Act. You see that?
Yes, I did.
And at paragraphs 7 to 9 over the page, at 0228, we see that ASIC requested both further details of your proposed remediation program and asked you to engage an independent advisory firm to review the remediation program. You see that?
Yes, I did.
And in mid-September 2017, so a couple of weeks after this letter, Select responded to ASIC and provided the information that was sought and confirmed that it would appoint KPMG to provide the independent report sought by ASIC.
That's correct.
But before matters could be taken much further in relation to the engagement of KPMG to do the independent report, there was another issue that intervened, wasn't there?
That's correct.
So if we look at ASIC 0025 0003 3248, we see that on the 9th of January this year, ASIC sent Select an email. And we see from that email that was sent to Select, from the first paragraph, apologies for the delay in responding to KPMG's draft terms of reference provided below. There are several reasons that have delayed our response, most notably due to information received from the project team who have been reviewing more recent Select AFSL calls for the Direct Life Insurance Review Project. I've been advised that the team reviewing these calls, which were from this financial year, have identified concerns not dissimilar to the concerns identified for the period January to September 2015. Specifically, the review team have identified concerns including pressure to close sales even where the consumer raises a concern, use of the cooling off period and delayed payment to close sales, indexation or stepped cover not explained. Noting the ongoing concerns over the practices of Select AFSL in its direct sale of life insurance, ASIC is not able to settle its concerns based on a backwards-looking review by KPMG, as previously discussed. We would like to meet with Select and KPMG to discuss ASIC's concerns that Select may not have the necessary policies and procedures and oversight to ensure compliance with the financial services law. That was the email received by Select in January this year.
This is the email that was sent to Peter and Cecilia, wasn't it?
Yes.
Yes, it is.
Yes. And ASIC's concerns in a nutshell were that Select's current conduct in respect of the sale of direct life insurance looked a lot like the misconduct that had been observed during the spike in the funeral insurance sales in 2015.
At the time, they conducted a review of the life insurance sector, and they listened to some calls, and they felt that the calls, there were too many objections in those calls.
Well, their concerns about those calls are summarised in this email, aren't they?
Yes.
Attend to that email, Commissioner.
Email ASIC to Select 9 January 18, ASIC 0025 0003 3248, Exhibit 4.186.
And ASIC's concerns were further fleshed out in a meeting on the 19th of January this year and in a letter sent to you on the 2nd of February this year.
Sounds correct, yes.
Yes, and if we go to that letter, it's Exhibit 18 to your first statement.
Just a moment. Ms. Orr, the document we've just got up apparently has got Mr. Howden's direct phone number and email. Should have been redacted out of it. And can I just draw attention to the fact that the direct email and phone number are subject to an NPD, non-publication direction.
Thank you, Commissioner.
Yes, sorry I interrupted you, Ms.
No,
Orr.
not
Can
at
you
all.
start again because I lost the thread?
I was directing Mr. Howden to the further fleshing out of the concerns held by ASIC in a meeting on the 19th of January and a letter on the 2nd of February. I was going to ask you to look at that letter, Mr. Howden, which is exhibited to your statement as Exhibit 18, SAF 0002 0001 0239. Now, this was a lengthy letter sent by ASIC to Select, we see on the 2nd of February 2018. And if we look to 0240, we see that ASIC expressed three principal concerns about what it was seeing in the more recent phone calls. We see them towards the bottom of the page. Our review of these materials gives rise to the following three main areas of concern about Select AFSL's sales model. 1, poor sales practices, with Select AFSL presenting as an outlier out of all firms in the review. 2, very high cancellation rates within the cooling off period and lapses within the first 12 months, which is an indicator of poor consumer outcomes. And 3, deficiencies in some of Select AFSL's processes and procedures that contribute to or drive poor behaviour, and concerns around a very sales-driven culture that fails to focus on the consumer. Those were the three principal concerns of ASIC.
That's correct.
And those concerns took a number of forms, as we see from the rest of this letter. If we turn to 0241, we see that some of the issues in relation to poor sales practices were associated with sales staff providing inadequate explanations of important concepts or failing to provide the appropriate level of clarity about what consumers were being offered. You see that?
Yes, I do.
And for example, we see in the third dot point there that ASIC expressed concerns about Select downselling consumers a form of more limited cover than what they thought they were buying. And ASIC noted that that could be devastating at claim time.
That was only in respect of a client who applied for underwritten life insurance and didn't qualify because of medical issues. The downselling they're referring to there is offering an alternative product, which is accidental death.
Well, there were many other issues identified by ASIC, weren't there, Mr. Howden? There were other poor sales practices issues that were associated with closing a sale. Do you see that on this page?
Yes, I do.
And ASIC was particularly concerned that the consistent use of deferred premium payments as a way of overcoming a consumer's objections, meaning that consumers who want to consider the policy further or who raise concerns over affordability are persuaded to buy the policy now. That was another concern of ASIC.
Commissioner, may I raise an issue at this point? As I understand this part of the letter, this relates to the sale of life insurance. There was a rubric that was sent to Select concerning life insurance, which was rubric 4-22, which Mr. Howden provided a draft response to as requested. He was never requested to finalise that matter, and our understanding was the issue of life insurance criticisms was not to be within the scope of the questions that are being asked. So my submission, this is an area that should not be traversed.
Well, I'm seeking to traverse this territory, Commissioner, because of the similarity in the issues identified in connection with life insurance sales very recently and the issues in connection with the sale of funeral insurance in 2015.
Mr Cheshire, given the recency of the communications with ASIC and the nature of the matters raised, why should I not allow exploration of these matters with Mr Howden, given the position he holds in the company?
Well, Commissioner, I have no objection to it being shown to him in the sense of this is what AFSIC have said, but if, Commissioner, you are considering and it's being put to you that you should make some determination about the conduct of the sale of life insurance, which is what this now appears to be moving into, that was precisely what we responded to in rubric 4-22 and were requested not to finalise. So we have proceeded on the basis of not having to address that. If we do, then, Commissioner, we would seek time to go away and to put before you a finalised version of 422 and, if necessary, all of the material that goes to make up these criticisms.
As you know, round 6 of the hearings will, I think it's round 6, will focus on questions of insurance. No doubt, if there is some question arising about the adequacy of opportunity to deal with matters raised in final address in relation to this round of hearings, that is a matter that can be dealt with then. In the meantime, I'm not minded to cut off the examination that is occurring.
May I just make one point in response to what, Commissioner, what you say to me? I understand the opportunity as it were, address in closing. But Commissioner, my submission is that it's a matter of procedural fairness in having...
Exactly. The point I was seeking to make was that if you consider that you have not had an opportunity sufficient to meet a particular finding which counsel assisting contend is open, that no doubt is a point that you will make to me. If you make it to me, I will consider it then.
I make it at this point, which is this witness is now being taken by surprise, being asked to address on the run these issues that ordinarily the witnesses are entitled to have notice, hence the rubrics being sent out to the witnesses indicating the areas on which they will be asked questions.
I hesitate to interrupt, but I feel I need to, Commissioner, because I am taking this witness to a document which is annexed to his statement responsive to the funeral insurance rubric. This is an exhibit to Mr Howden's statement in response to rubric 423, which is a rubric prepared for the purposes of these hearings. I don't accept the assertion that this witness is being taken by surprise in those circumstances where he has exhibited the document to his statement.
So I will not interrupt the cross-examination at this point. Ms Orr, you may proceed.
Thank you, Commissioner. Now, also on this page at 0241, Mr Howden, we see that ASIC was concerned about Select sales representatives refusing to send out documentation requested by consumers to help them make a decision and telling those consumers that that was not Select's practice.
Unfortunately, at the time, we didn't have the functionality to automatically generate a quote to email to the client. We now do have that functionality and it is provided to the client.
You see at 0242 that ASIC observed excessively pushy or aggressive sales techniques that we think are inappropriate and undermine informed decision making.
Yes, I see that.
And amongst other things, we see there that ASIC expressed concerns about persistence in overcoming consumer objections, the speed with which calls were conducted, combined with the use of questions presented as statements that the consumer simply needs to agree to for the conversation to move on, and the use of inappropriate and pushy sales tactics such as staff firmly directing consumers to log on to their mobile phone banking apps while on the call to confirm their banking payment details.
I see that.
Now, this was a broader manifestation of the issues that you wanted to attribute to the two sales representatives back in 2015.
I was asked to, in the context of those two representatives, it was sales to the Aboriginal communities and the spike in sales in 2015.
Yes, well, what I want to put to you squarely, Mr Howden, is that this was an issue with the culture at Select.
Ms Hall, I must agree with my own counsel, this is a bit of a surprise, but
It is an exhibit to your statement, Mr Howden.
because you asked for all the dealings that we had with ASIC, and we gave you all the dealings that we had with ASIC.
Yes.
But anyway, we were accused of, as an organisation, of being very sales orientated because our ads included a reference to uncapped commission. But all the call centres have references to uncapped commissions as a feature in terms of recruiting staff.
I haven't referred to uncapped commissions.
No, but you're talking about the sales culture
Yes,
of
I
the
am.
business.
Well, I'm asking you about the culture that permits the concerns that ASIC has raised in this letter to occur.
Again, and we had a meeting with ASIC and we did address each one of those concerns. We've entered into a voluntary program with them. We're still trying to work out the exact details of that. And we said we're happy to listen to calls, independent. We have engaged an independent remediator. We have changed our recruitment to remove uncapped commissions. So we're actively working with ASIC to try and overcome some of those concerns they've got.
Well, we see from this letter that ASIC identified that 30% of the calls that it reviewed involved inappropriate sales tactics.
Well, originally the sample, yes, they identified 19 sales out of 55 sales, yes.
And the next worst offender in their review across other life insurance sales entities had less than 10% of their calls indicating such practices.
But we did point out to ASIC, and they did note that that when they reviewed the life insurance sector, most of the players who provided information were selling underwritten life insurance, whereas the bulk of our sales were guaranteed acceptance life insurance.
Well, the second major area of concern to ASIC was the very high cancellation rates within the cooling off period and lapses within the first 12 months, which it regarded as an indicator of poor consumer outcomes.
And again, we did point out to ASIC using a benchmark of Strategic Insight 2016 report, where they excluded cancellations occurring in month 1, and they said that the average for outbound in the first year cancellations is 45%. Our cancellations are 22%, excluding CFIs.
Where do we see that in this letter, Mr Howden?
You won't see that in the letter.
No. And the third area of primary concern to ASIC related to deficiencies in your processes and procedures that contributed to or drive poor behaviour and concerns around a very sales-driven culture that failed to focus on the customer. And ASIC had 5 sub-areas of concern on that topic. The first was that your sales training was unclear on what is acceptable and unacceptable conduct in the context of objection handling.
And we have, as a result of that, changed our objections to a maximum of 2 objections per call, where previously you were allowed maximum of 2 objections per objection.
And in respect of your quality assurance framework, ASIC expressed the concern that it didn't appear to be effective in appropriately managing the boundary between acceptable and unacceptable sales practices.
We have said to ASIC that we're happy to provide ongoing reviews to that.
And ASIC was worried as well about your recruitment processes because you sought to target money-driven individuals and you emphasised the fun and the availability of perks and uncapped commission and made no mention of consumer outcomes.
That's correct. We're competing with other call centres and we use similar recruitment terminology to those other call centres.
And ASIC thought that your incentive schemes were likely to create a risk of sales at all costs.
Well, clearly you can see our current remuneration procedures do not have any commission attached to them at all. It's all quality assurance.
ASIC was also concerned with your performance management framework, and we see at 0245 that having gone through all of these matters, ASIC expressed a concern. ASIC said that these issues were particularly concerning when viewed in the context of the problems relating to funeral insurance. Do you see that?
Yes, I do.
And ASIC reached the conclusion that it had observed a pattern of poor conduct at the point of sale that is persisting, and a failure on the part of your management to effectively address the problems that have been identified by ASIC over a significant period. You see that?
Yeah, I agree, that's written there, yes.
And ASIC asked you to expand the scope of the independent review to satisfy ASIC that you were able to sell funeral and life insurance products in a way that met your ongoing licensing obligations, including the duty to act honestly, efficiently and fairly.
I see that, yes.
And we see from 0247 that ASIC concluded by saying that it considered urgent action was necessary and that you should immediately cease to engage in the poor sales practices set out above, in particular using deferred payment periods to overcome objections, persisting in objection handling beyond what is reasonable, and actively directing consumers to log into their banking apps while on a call in order to complete a sale.
Yes.
Now, just under 3 weeks after receipt of this letter, we see from your statement that Select responded to it.
Correct.
And Select told ASIC that it intended to fully comply with those requests.
That's correct.
And it explained some revisions to its remediation program.
Correct.
And indicated that it would put the wheels in motion for the broader independent review.
Correct.
There was further correspondence between Select and ASIC throughout March and April, which focused on the remediation program and the independent review.
Correct.
And throughout that period, ASIC continued to emphasise its concerns about the brand of sales tactics used by Select, which it characterised as persistence and not acknowledging customers' wishes not to proceed.
Correct.
And as at the 11th of April this year, which is the date of the most recent ASIC letter exhibited to your statement, ASIC remained concerned about the scope of your remediation program in relation to the 2015 spike in funeral insurance sales.
I'm not sure what that exact letter says. Does it just refer to the funeral sales or to all sales?
So concerned about the scope of your remediation program across both, you say?
Oh yes, it's across both.
Okay. Now, ASIC also in that letter on the 11th of April raised concerns with you about the number of customers who were expressing affordability concerns but were persuaded to take out cover regardless, and the number of your customers who are reliant on Centrelink payments as their sole or main source of income.
I recall that statement.
Do you recall ASIC's concerns that you don't have adequate processes in place to safeguard the interests of vulnerable customers as part of the acquisition, sales and retention process?
As part of the sales script, and more than one point in the sales script, we do ask the client if it's affordable, and we keep coming, and finally, before we proceed, we ask the client again, is this an affordable product for you?
What about having adequate processes in place to safeguard the interests of vulnerable customers? ASIC doesn't think you do.
We've made several revisions over the month to our processes to try and identify, in terms of one of the processes we've introduced, if we become aware that a person is from an Indigenous or Torres Strait Islander, once we identify that, we request to the client that we will send out the product disclosure statement to them and request that they give us a call back. And it's included in one of my annexures in terms of the confirmation process.
So that's now your procedure where a customer identifies themselves to you as Aboriginal or Torres Strait Islander person?
We'll suggest to the client that we will send them out the product disclosure statement.
I'm sorry, I just want to make sure I understand what triggers that. Is it where a potential customer identifies themselves to you as an Aboriginal or Torres Strait Islander person? And do you ask your customers?
We don't ask them.
Now, was this independent review that you were talking to ASIC about ever undertaken?
The scope has still been determined with ASIC. I don't know how broad you want the response, but ASIC suggested we adopt a formula-based approach to potential remediation. We agreed with most components, but we haven't finalised the scope of that remediation exercise.
I see. Now, Mr Howden, do you agree that there are clear parallels between the concerns that ASIC has been expressing very recently about your sales practices in relation to life insurance and the practices that led to the mis-selling issue in 2015?
I do believe the 2015 issues were not related.
Not related?
They were driven by two agents and two incentives.
They were driven by much more than that, weren't they, Mr Howden? They were driven by the sales structure sanctioned by your company, by the KPIs and remuneration structure by which you rewarded your sales agents, and by an inadequate quality assurance and disciplinary framework.
I cannot agree that rewarding agents for productivity is necessarily a bad outcome.
There are clear parallels in relation to your treatment of vulnerable consumer groups for both sets of events, aren't there?
Could you repeat that statement, please?
There are clear parallels between your treatment of vulnerable parts of the consumers in relation to the conduct that ASIC has been looking at recently and the conduct that occurred in relation to funeral insurance in 2015.
There is some overlap, I'll accept that.
Has Select given a Section 912D notification to ASIC in relation to the 2015 misconduct yet?
Sorry, I'm not familiar with that section.
I'm sorry, a notification of a breach, a significant breach under Section 912A of the Corporations Act. Have you ever given ASIC that notification in respect of the 2015 issues?
We got legal advice and we had a discussion with ASIC and we told them the remediation program that we were carrying out.
So do I understand that to be an answer of no to my question, Mr Howden? And have you given a notification of a significant breach of 912A to ASIC in respect of the life insurance mis-selling issues that have been identified recently?
No.
Why not, Mr Howden?
Because as we set out in the response to that letter, one of the conclusions that ASIC arrived at for the life insurance would help first year lapses were higher than the other companies in that sample. And all the products were predominantly the products that we were selling were guaranteed acceptance products, life insurance products, which always do have a higher lapse rate than underwritten life products. So we did explain to them the difference between the two products. An underwritten life product will have a higher first year persistency versus a guaranteed life product, because it's a less detailed process, tends to have a higher lapse rate.
So you've referred there to one narrow aspect of the many concerns identified by ASIC in the recent months.
And we did say to ASIC that we're happy to review calls.
You told us yesterday that since the 19th of March this year, Select no longer promotes and distributes St Andrew's funeral insurance products.
That's correct.
Why did Select stop promoting and distributing those products?
Well, as set out in my response to my statement, changes to the remuneration in the life insurance remuneration arrangements means as a distributor we're no longer able to get upfront allowance of 100% or more to cover the policy acquisition costs. Essentially, from the 1st of January, we've what we call a level commission option. Commercially, we just don't have sufficient funding, if you want to call it, to support our policy acquisition process.
You say in your statement it's no longer commercially viable for you to do this under the life insurance framework reforms.
Correct.
And when you're talking about the life insurance framework, are you referring to the changes to the Corporations Act that provide for caps on the amount of commissions that may now be received for life insurance products?
Yes.
And they created new arrangements for clawing back commissions that had been paid?
Correct.
And those changes came into effect on the 1st of January this year?
Correct.
But they were announced well before then, weren't they?
That's correct.
They were announced on the 6th of November 2015.
Correct.
And they were enacted on the 22nd of February 2017.
Correct.
And ASIC announced what the commission caps and clawback amounts would be on the 5th of June last year.
Correct.
So you knew by June last year the effect that the life insurance framework would have on the commercial viability of your distribution arrangement with St Andrews.
And that is why we were in discussions with St Andrews, as well as other insurers, to see if there was an alternative model. An alternative model would be for the insurer to pay for the lead acquisition costs, because ultimately it is an expense to the insurance company. But we weren't able to negotiate an alternative arrangement to the funding, so we had to self-fund for the first 2 months.
When did you work out that you weren't able to negotiate an alternative arrangement?
Within 2 months.
Within 2 months from?
The end of February.
End of February, which year?
2018.
So within 2 months of the end of February this year?
Oh, no, sorry. At the end of February 2018, it became apparent that there was no alternative model.
How did it become apparent?
Because we consulted with other operators in the industry. Pretty much there's two models: either you're an insurer, and there's really no caps in terms of structures there because you're an insurance company. And then we consulted with other distributors, and they weren't able to negotiate other arrangements.
So when did you last enter into a new distribution arrangement with St Andrews?
1st of January 2018.
So you entered into that agreement in December last year.
Correct.
With effect from the 1st of January.
Correct.
So at that point you had every intention of continuing to distribute St Andrews funeral insurance products.
That's correct.
Then in December 2017, St Andrews came and conducted an on-site compliance visit at your premises, didn't they?
They did.
And as a result of that visit, they developed a series of recommendations that you were required to implement in 2018.
Correct.
And could I show you BOQ 0001 0112 0092? So this is a meeting agenda for a St Andrews Divisional Risk Management Committee meeting on the 28th of March this year. And if we turn to 0093, we see that one of the agenda items for that meeting was a Select AFSL on-site visit actions update. And we can see that a paper 3.3, was prepared for that agenda item. You see that?
That's the first time I've seen this.
Right. Well, let's turn to 0140 in this document, which is the paper. We see from this that the paper prepared by St Andrews Divisional Risk Management Committee shows at 4.1 that as a result of the on-site visit, a number of draft recommendations were made to Select, resulting in the parties agreeing to an action to be implemented over the course of 2018. And we see that the agreed actions, timeframes and updates are set out in an appendix, which is at 0144. 4.3 is the first page. So if we could turn this round, we can see that this sets out the recommendations made by St Andrews for Select. And the first recommendation was that Select increase the resources that it devoted to compliance. Do you see that?
I see it now, yes.
And in response, Select said that it had no current plans to expand compliance resourcing.
I see it in this document.
And at 0144, we see that the second recommendation related to the first. It was for Select to create an independent compliance function, for example, by appointing a dedicated compliance manager. See that?
That's all. I see this for the first time.
Yes, I understand that. I'm just asking you to read it on the screen, Mr. Howden.
I can see it on the screen, yeah.
And you see the entry there reflecting that Select said it would not do this.
I see an entry there, yes.
And then we see from following pages, which I'll ask you to be shown, 0145 and 0146, that there are other recommendations, all with target dates for periods from February to May 2018. So Select agreed to make some changes as a result of these recommendations.
I've never seen this report before.
But you're aware of these recommendations, aren't you,
I'm
Mr.
not aware
Howden?
of all these recommendations, no.
These were recommendations made to Select by St Andrews.
This is the first time I've seen this report, this
I
document.
understand that, Mr. Howden, but you're here on behalf of Select. Are you saying that you are unaware of recommendations made by St Andrews
aware
to
that,
Select as a result of the on-site compliance visit?
I'm aware that St Andrews paid us a visit in December.
Yes,
They made some recommendations.
yes,
By and large, they said they were happy with most aspects of the business. They also provided us a report that said culturally that they were happy with the culture of the business. And they suggested that we increase certain calls and retention. The facts that you're tabling here, I haven't seen this report before.
I understand that, Mr. Howden. I'm asking you to read it. And I'm asking you to consider what's in this document, which suggests that you were asked to make significant compliance changes, and you indicated that you would not do so.
We never said we would not do so, and that I can categorically say is correct.
So the contents of this document are inaccurate. Is that your evidence, Mr. Howden?
Yeah, I would say that they are inaccurate, yes.
I see. I tender that document, Commissioner.
St Andrews Risk Management Committee meeting papers 28 March 18 BOQ 0001 0112 0092 Exhibit 4.187.
So around the same time as these events, the correspondence with ASIC is occurring. You received the letter that I took you to earlier from ASIC on the 2nd of February this year, raising all the concerns I took you to, and you responded to that letter on the 23rd of February 2018. And you provided copies of that correspondence to and from ASIC to St Andrews, didn't you?
Correct.
And in early March this year, on the basis of the concerns that had been raised by ASIC in its correspondence, St Andrews conducted another on-site compliance visit at your premises. This time it went for over 2 days, didn't it?
That's correct.
And the purpose of that visit was to assess the effectiveness of the changes that you were to make to your sales practices as a result of the concerns raised by ASIC.
And I preface that all the scripts were approved by St Andrews, and that visit was to ensure that we were following the scripts that St Andrews had approved.
What letter was to ensure that?
The visit in March by St Andrews was substantially to ensure that the representatives were following the scripts that had been approved by St Andrews.
So you agree it
And
was
all the
to...
changes that St Andrews requested, we made to those scripts. We made to those scripts.
You agree with me that it was to assess the effectiveness of changes that you needed to make to your sales practices as a result of the concerns raised by ASIC?
There may have been some of those concerns, yeah.
And on the 14th of March this year, St Andrews sent Select a letter.
Which letter was that?
That's a letter which is ASIC 0025 0003 0790. It's a letter directed to you, Mr Howden, on the 14th of March 2018 from St Andrews. Thank you for sending the letter from ASIC dated 2 February 2018 and your response to that letter dated 23 February 2018. St Andrews has now considered the issues raised by ASIC in light of the distribution agreement between St Andrews and Select dated the 1st of January 2018. Customer outcomes are of the highest importance to St Andrews, and Select's sales conduct falls considerably below St Andrews' expectations, community expectations, and in our view, corporate standards imposed by applicable financial services law. St Andrews' strong position is that Select immediately cease the sales activities identified by ASIC, undertake all actions necessary to fully rectify the issues raised by ASIC, and remediate affected customers fairly and in accordance with the guidance provided by ASIC. In light of the concerns regarding sales practices and the significant changes in sales process and practices proposed by Select, as you are aware, St Andrews conducted an on-site visit last week to understand and assess the compliance with and effectiveness of the changes implemented by Select. St Andrews is currently collating and considering the results of this visit, but expects the increased frequency of its monitoring and oversight to continue to ensure customer and community expectations with respect of Select sales activities are met and maintained. We expect Select's full support and assistance in this respect, including appropriate on-site access as required. These measures are over and above the changes in St Andrews monitoring and oversight introduced in recent months, as set out in the current distribution agreement. And over the page at 0791, we see that St Andrews asked you to note that it was reserving its decision with respect to the future renewal or extension of the distribution agreement in light of the ASIC ongoing investigation and the significant work involved in customer remediation and rectification of your sales model and practices, and it was considering whether the conduct of Select amounts to a breach of applicable laws. Do you see that?
I do see that.
So at this stage, in March of this year, St Andrews has indicated to you that it may not continue its relationship with you because of its concerns about your compliance with the law.
It's actually quite surprising because St Andrews requested we renew the agreement in November of last year for a further 4 years. I requested a 6-month extension, primarily to look at whether we can come up with an alternative funding model. And that's well documented.
Well, that was before St Andrews saw the letter directed to you from ASIC on the 2nd of February this year, outlining the litany of concerns that ASIC had with your sales model.
Then they came back and they did an audit, and if you ask them for the results of the audit, they will say that the agents didn't follow the script on the screen, because some of the agents had a handout which essentially had the same messaging on it. And they said they weren't reading directly from the computer screen, but they were looking at the handout.
I'll tender this letter, Commissioner.
Letter St Andrews to Howden, 14 March 18, ASIC 0025 0003 0790, Exhibit 4.188.
And in the days after this letter, Mr Howden, St Andrews management told Select of its findings as a result of its on-site visit.
After this letter, yes, they told me this, yeah.
Well, after this letter, you recall in this letter they said that they were still considering and collating the results of their on-site visit.
Right.
And in the following days they told you of their findings. And as a result of those findings, it was agreed that all sales activity by Select would cease until the concerns raised by St Andrews had been resolved to the satisfaction of all parties.
No, that's factually incorrect. We never ever stopped selling, or they never told us to stop selling. We elected Select AFSL, and again for commercial reasons, to stop selling.
Well, could I take you back to BOQ 0001 0112 0092, the meeting agenda for the St Andrews Divisional Risk Management Committee on the 28th of March, and ask you to look at 0141. You see on that page, when it comes onto the screen, a Select AFSL general update, which refers to the 2-day on-site visit.
What point's this?
5.1. 5.2, management submitted their high-level findings to Select on the 16th of March, where a number of next steps were made as a result of the visit, including that sales activity be ceased until such time as the concerns raised in the findings and recommendations have been resolved to the satisfaction of all parties. Select advised on 19 March that all sales activities had been ceased. So 3 days after the communication from St Andrews requiring that course.
That's all. I never received this communication from St Andrews.
This is another inaccurate statement in this document, is it, Mr. Howden?
I would request that St Andrews can show me a statement saying that we should stop all sales, addressed to myself or any other member of our company.
Well, a few weeks after this, on the 4th of April, Select sent 2 letters to St Andrews. One of them responded to the letter that I've just shown you from the 14th of March, and there was a separate letter, which is BOQ 0001 0106 0104. We see there a letter from you to St Andrews on the 4th of April. We refer to the distribution agreement. Given that Select has already suspended all sales activities under the distribution agreement and does not intend to extend the distribution agreement beyond the 30th of June, Select proposes that the distribution agreement be terminated by agreement effective immediately. You see that?
Yes, I do.
And Commissioner, I note the telephone number on the bottom of that document as well.
Yes, the phone number is subject to a non-publication direction.
Now that was a letter explaining why you were ceasing funeral insurance sales.
That was the notification to St Andrews that we would be ceasing.
You weren't ceasing funeral insurance sales because of the life insurance framework changes, were you, Mr. Howden?
We sent a letter to St Andrews telling them that we would stop selling.
I want to be
I
clear.
think to put some context to it, we had already reduced the number of sales agents, effective 1st of March, to 4 agents. 4 agents from a team of 25, because of the commercial constraints that we had in terms of financing.
I want to put to you, Mr. Howden, that you weren't entirely frank with the Commission in paragraph 2.1 of your statement when you explained the cessation of your funeral insurance business by reference to the life insurance framework.
How can you say that, Ms. Orr?
Based on all of the documents I have just shown you, Mr. Howden.
Do you not think that I want to continue to sell insurance?
I'm asking you whether you were frank with the Commission.
I was frank.
And you didn't refer to any of these matters, did you, Mr. Howden?
No, but the commercial reality is that we could not fund the distribution.
The fact is that ASIC raised concerns about your sales practices. St Andrews became aware of those concerns.
And we changed our sales scripts in accordance with requests by St Andrews, and we implemented those changes.
After a site visit at your premises, St Andrews required you to change your practices, particularly your compliance and sales practices, and required you to cease all sales until you had made those changes.
They never ever told us to cease selling. We never received a directive, and I would request that St Andrews provides us with a copy of that directive.
I see. I tender this statement, Commissioner.
That's the letter from Howden of Select to Way of St Andrews, 4 April 18, BOQ 0001 0106 0104, Exhibit 4.189.
Now, Mr Howden, throughout the period that Select St Andrews and Bank of Queensland were corresponding about this distribution agreement, you were all also discussing how to manage your relationship with the Royal Commission, weren't you?
What do you mean we're trying to, and I wasn't aware that we're coming to the Royal Commission.
Well, let me show you some documents, Mr Howden. We'll start with ASIC 0025 0003 1015. This is an email from Select to ASIC, dated the 4th of April 2018, annexing various documents. I want to take you to one of the annexed documents, which is ASIC 0025 0003 1133. I see this document records that on the 19th of February this year, the Bank of Queensland requested Select's formal consent. I'm sorry, we'll need the following page on the screen as well. I'm reading from the email that starts at the bottom of that page, an email to you. We see that the Bank of Queensland requested Select's formal consent to voluntarily disclose the issues relating to Select's sales of funeral and life insurance to the Royal Commission. You see that?
Yes, I do.
And the Bank of Queensland raised the concern that ASIC was aware of those issues. You see that?
Yeah, so just to clarify, and I'm not sure what the due process is here, but we did get legal opinion on this, and we said we'd always cooperate with the Royal Commission.
Well, let's...
But we didn't want to agree to give a blanket waiver of everything that was private in terms of our agreements with St Andrews. We said to the extent that it relates to the Royal Commission, we'll cooperate with the Royal Commission.
Well, let's come to what you said in response to this request. But before I leave it, we see that Bank of Queensland said to you, ASIC is aware of these issues and ASIC is providing information to the Royal Commission, which will be used to cross-check the responses from industry. Do you see that?
Which point's that?
This is all on 1134 on the right-hand side of the screen. See that the Bank of Queensland said, we assume ASIC would have disclosed any matters relating to actual or suspected licensee misconduct or behaviour falling below community standards and expectations to the Royal Commission, and this may have included information relating to the issues with funeral and life insurance.
And again, I've got to come back to what I said earlier. We didn't say we would not cooperate with the Royal Commission.
Well, I want to take you to how you responded to this email, Mr Howden, but this is an email that you received from a representative of Bank of Queensland, the owner of St Andrews, on the 19th of February 2018. Do you agree?
Yes, I do.
Thank you. I tender that document, Commissioner.
Is it simply the email or the whole
I think
attachment?
It's sufficient for me to tender Annexure B, Commissioner, which starts at ASIC 0025 0003 1133, and it's Annexure B, which is one of the annexures to an email from Mr Howden to Barbara Butner of ASIC on the 4th of April 2018.
Annexure B to the email, Howden to ASIC 4 April 18, ASIC 0025 003 1133 is Exhibit 4.190.
Now, your response to that email is within this document. Do you see that, Mr Howden? 2 days later, you responded to the request from the Bank of Queensland on the 21st of February. You said, "Thank you for your email. We do not consent to the request to voluntarily disclose confidential information of Select about the issues as defined by you. In particular, we do not consider there to have been any misconduct or falling short of community standards or expectations arising out of any matter which would bring it within the scope of the Banking Royal Commission." That was your response?
Correct?
Now could I ask you to look at ASIC 0025 0003 0790. So this is a letter from St Andrews to Select dated the 14th of March 2008, so a few weeks after the emails we just saw. And do we see there on the 14th of March that St Andrews expressed its disappointment with your response to its request about disclosure to the Royal Commission?
Yes?
And we see it's 0793. That's the page you ought to have had on the screen when I put that question to you, Mr Howden. Do you see the large paragraph under the heading Voluntary Disclosure to Royal Commission? Bank of Queensland is disappointed with this response. As we outlined, it is highly likely that the Commission has received or will receive information on both matters from ASIC and will be aware of our relationship. We therefore view voluntary disclosure as a gesture of cooperation with the Commission and one that signals our willingness to be open and transparent in respect of matters that may fall within the Commission's terms of reference. The Commissioner has publicly confirmed that notices to produce have been issued and will continue to be issued. If the Commissioner becomes aware of the matters relating to Select's distribution of St Andrews funeral insurance and life insurance policies, he may be minded to issue Bank of Queensland with a notice to produce materials relating to these issues. At this point, Bank of Queensland will have no option but to produce the material requested by the notice, irrespective of your position on consent. We therefore ask that you reconsider your position and provide Select's consent to disclose those issues. That was the communication you received, Mr Howden, from St Andrews Insurance on the 14th of March 2018.
That's correct.
And in response to this, Select again refused consent to disclose the information.
I don't have it in front of me, but we did clarify with...
ASIC 0025...
Just a moment, we should. The letter way of St Andrews to Howden of Select 4 March 18, ASIC 0025 0003 0790, Exhibit 4.191.
I'm sorry, Commissioner, I had already tendered
That's
that
in?
letter. Yes, I had referred to an earlier part of the letter.
And we need to mark it again.
4.188. ASIC 0025 0003 1020, a letter from Select to St Andrews dated the 4th of April 2018. Now, if we could turn to the attached letter to this email, we see that it's an email from you to representative of St Andrews. Just make sure I've got the right document.
From St Andrews to myself, is that what you're saying?
I'm sorry, the numbers have been transposed. I'll read the whole number again. ASIC 0025 0003 1020. This is your letter to St Andrews from the 4th of April 2018. I'll have the third page brought on the screen so that you can see it's a letter authored by you, Mr Howden. You see that?
Yes, I do.
And in this in this letter, at 1022, under the heading Voluntary Disclosure to the Royal Commission, you reiterated your previous position in response to the request from St Andrews to provide consent for disclosure of these issues to the Royal Commission.
And the first paragraph does say we will provide the information.
Should Select be requested to provide such documents to the Royal Commission, it will do so. So should the
Correct.
Royal Commission ask you for those documents, you would give them?
Correct, well, requested by...
Yes, but you had not disclosed and you had not given St Andrews permission to disclose
Legal
the very
advice.
misconduct, had you, Mr Howden?
Legal advice, Ms. Orr, that we got was not to agree to a blanket waiver of all confidential information, but
I
if
see.
specific information was requested, we should provide that, and it was intended to do so.
In this letter, you reiterated that you do not consider there to have been any misconduct or conduct falling short of community standards or expectations arising out of any matter which would bring it within the scope of the Banking Royal Commission.
That's correct, that was our belief.
Now, you heard Ms Marika's evidence yesterday, Mr Howden,
I did.
and you've given a series of answers to questions from me throughout the course of this morning and yesterday afternoon. And in light of all of those matters, do you maintain that there has been no misconduct or conduct falling short of community standards or expectations on the part of Select?
I can agree with you that there have been incidents, but I cannot agree with you that the whole business can be classified as such.
But there have been incidents of misconduct and conduct falling below community standards and expectations that required disclosure to the Royal Commission, haven't there, Mr Howden?
We have responded with our reasons to those.
Yes, after the Royal Commission issued you with rubrics for statements and compulsory notices to produce documents.
And we'd previously provided information to ASIC as well.
But not to the Royal Commission.
When requested by the Royal Commission, obviously we did provide information.
You did not voluntarily disclose anything to the Royal Commission, and you did not provide consent to St Andrews to voluntarily disclose.
We did agree that if St Andrews was required, we would cooperate with St Andrews.
Yes, but you did not permit them to voluntarily disclose the misconduct, nor did you voluntarily disclose it yourself.
Correct.
Now, attend to that letter, Commissioner.
Letter Howden of Select to Way of St Andrews 4 April 18, ASIC 0025 0003 1020 is Exhibit 4.191.
Now, I want to deal finally, Mr Howden, with the evidence of Ms Marika yesterday in court. You heard that evidence?
Yes, I did.
You heard that Ms Marika was first contacted in August 2015 by an external lead provider.
Correct.
And you say in your statement that on that occasion, Ms Marika confirmed her acceptance to receiving a call in regard to funeral insurance.
Correct.
Now, having heard Ms Marika's evidence yesterday, do you consider that Ms Marika wanted to receive a follow-up call about funeral insurance from Select?
She did participate in a phone survey where she did agree to get a call back.
Having heard Ms Marika's evidence yesterday, do you consider that Ms Marika wanted to receive a follow-up phone call about funeral insurance from Select?
I heard it from Ms Marika yesterday. I agreed that she didn't want to get that call.
But Select made a call to Ms Marika for the first time on the 25th of August 2015.
Correct.
And in your statement you say that that call was interrupted due to the phone connection being cut.
Yes.
But just prior to that call being cut, Ms Marika had clearly indicated that she did not have any interest in taking out a policy with Select, hadn't she?
Correct.
She indicated that she can't have two, both mine, referring to two funeral insurance policies. Do you recall that?
Yes, I do.
And when the Select representative tried again to offer a policy to Ms Marika, she said, no, I'm happy with the other one. Do you recall that?
Yes, I do.
And the Select representative persisted after that?
And he shouldn't have done so.
He was handling an objection, wasn't he, Mr Howden?
Well, once he realised that she already had insurance and he wasn't sure what insurance she had, he should have arranged for a callback.
Well, he knew she had insurance right from the start. She made that clear at the outset, didn't she?
He wasn't sure what the policy was, and she wasn't sure what the policy was.
Well,
So you
they
can
were-
only do a comparison quote if you know what the insurance policy is.
They were both clear that she had another funeral insurance policy, weren't they?
Right.
And after Ms. Marika said, no, I'm happy with the other one, the Select representative had another go, to which Ms. Marika responded, oh, no. Do you recall that?
Yes.
Now, having heard Ms. Marika's evidence and having reviewed the transcripts and listened to the recordings of those calls, are you in any doubt as to whether Ms. Marika was interested in taking out a funeral insurance policy with Let's Insure?
I agree that the sale shouldn't have been made. I agree that the agent should have followed up with a follow-up call, requested Ms. Marika phone her back. It appears, listening to the full recording, that Ms. Marika knew what the insurance was about, but I agree that it shouldn't have been made, that sale.
You say she knew what the insurance was about.
She knew it wasn't about a funeral insurance policy.
Do you think she understood the funeral insurance product that was being sold to her?
Not in its entirety, no.
Not in its entirety?
Yes.
What do you mean by that, Mr. Howden?
He probably didn't understand all the features like accidental serious injury, accidental death. She knew that about funeral insurance. She'd agreed initially to do a call about funeral insurance. She didn't know all the inner workings of the product.
You've come back to her agreeing initially to receive a phone call about funeral insurance. I thought you accepted that the evidence established that she didn't want to receive a follow-up call from funeral.
Once I heard the discussion with her yesterday, I came very firmly to the conclusion.
And it would have been very clear to the other person on that call, wouldn't
And
it?
I agree, Ms. Orr, he should have ended that call.
The next Select call to Ms. Marika happened on the 9th of September 2015. And early on in that call, we heard the representative say that he was giving Ms. Marika that call back from Let's Insure. Do you remember that?
Yep.
Now, that made it sound as though Ms. Marika had requested a call back from Let's Insure, didn't it?
Yes, it was wrong the way he positioned it.
I'm sorry?
It was wrong the way he said it's a callback.
Yes, it wasn't a callback, was it,
Agreed.
Mr. Howden? And that was confusing to Ms. Marika.
Yes, it was confusing.
The representative then said to her, oh, you've done the survey online about the Let's Insure funeral cover, and I'm just here to give you your free quote, okay? You recall that?
Yes, I do.
No online survey had been done by Ms. Marika, had it, Mr. Howden?
The agent got confused with the lead provider says, I'm doing a survey, and the agent got confused and referred to an online survey when he should have referred to a voice lead.
No online survey had been done by Ms. Marika, had it, Mr. Howden?
Hadn't been done.
And during that call, which you accept Ms. Marika didn't want to receive, Ms. Marika agreed to acquire funeral insurance cover for herself, her children, and her 5 grandchildren.
Correct.
And Select set up 2 policies for Ms. Marika because at that time you capped the maximum number of people on one policy as 5 people, didn't
Correct.
you? Now, you accept, don't you, Mr. Howden, that there were a number of very serious defects in the processes used by the Select representative in this call?
Yes, I do.
You accept that the Select representative told Ms. Marika that it was common for people to have 2 funeral insurance policies?
Yes,
And he also said to her that her work policy would stop if she stopped working, but that the Let's Insure policy would continue to be in place and provide cover.
and he shouldn't have made that statement.
So both of those statements shouldn't have been made, should they, Mr. Howden? This sales representative had no details of the work policy that Ms. Marika had, did he?
I agree.
Do you accept that the representative was giving personal advice when he made that comment?
He shouldn't have made that comment. Yes,
Well, he was giving personal advice, wasn't he, Mr Howden?
yes, he was giving personal advice.
And you're aware of the statutory restrictions on the offer of personal financial advice under the Corporations Act?
Yes, I am.
And in your training material, you warn staff against providing personal advice?
Correct.
But that was precisely what this representative did?
The whole call was terrible. I accept that. It failed. I can't defend that call.
He wasn't authorised or licensed to provide personal advice,
Correct.
was he? And he didn't provide any disclosure statement or document?
No.
And he therefore contravened section 952 capital C of the Corporations Act.
But if you say he has, he probably has contravened that.
Are you aware that that's an offence provision, that it is an offence to provide personal advice other than in the circumstances prescribed
Yes,
by
I'm
the
aware
Act?
it's an offence to provide personal advice. Yeah.
Now, Ms Marika was never asked for her consent to receive a product disclosure statement orally, was she?
No, she wasn't.
That was another statutory breach.
Yes.
And we heard that the representative said to Ms Marika, perfect, well what I'll do for you, Kathy, so we can get you all covered, I just need to play you a recording. It's only 60 seconds long, so you make sure you listen to this. You'll come straight back to me and we'll get you and all the kids sorted, okay? And Ms Marika responded, okay. And the agent said, no worries. And following that, the PDS recording was played. Is that right?
Yes, that's right.
So that was the conduct that breached section 992 capital A 3E of the Corporations Act.
I agree with you. The call was a failed call.
And do you agree that there was a breach of the provision requiring the obtaining of consent to receive the PDS in the call?
Again, without looking at the full script, and as we referred to earlier, and I'm not sure if it was an assumed request by playing the PDS.
Well, she wasn't asked for her consent to receive the
wasn't asked
product
for her
disclosure
consent.
statement
Yeah.
in that way, was she? And therefore there was a breach of that provision.
I'm not qualified to comment on that.
All right. You accept that there were multiple occasions in this call in which Ms Marika appeared confused,
Yes, I do.
and you say in your statement that on listening to the calls, you formed the view that Ms Marika's language skills and general comprehension were not obviously impaired, such that she was not aware that she was purchasing funeral insurance for herself, her children and grandchildren. Now, having listened to Ms Marika's evidence, do you maintain that position?
At the time we listened to the call, it appeared that she, at various stages, comprehended what was being put to her.
And having
So
heard...
when I've heard it in person from her yesterday, I've no reason to dispute what she's saying.
But you say in your statement that your review of the call recording caused you to form the view that while it suggested that she while the call recording suggests Ms Marika consciously provide her bank details for purposes of paying for these policies and agreed to the direct debit arrangement, there were sufficient signals during the call that suggest that she may not have fully understood the product she was purchasing and the consequences of the purchase. Correct. So that was your position even prior to
Correct.
seeing Ms Marika's evidence. And you said in your statement that you considered that those signals should have been obvious to the sales agent on the call.
Correct.
In all of those circumstances, was it unconscionable to sell the funeral insurance policy to Ms Marika, Mr Howden?
Yes, it was.
Thank you. And then on the 10th of September, there were 2 further calls between Ms Marika and Select. Do you recall that?
Yes.
And in the second call, the representative requested from Ms Marika details of family members and friends for the purposes of trying to make more sales.
Correct.
And you say in your statement that that was unreasonable?
Correct.
And you say it was a gross abuse of Select's referral program.
Correct.
Now, by virtue of your sales training, your KPIs, your incentive schemes, your quality assurance scheme and your disciplinary framework, I'll put to you directly that you had created a situation in which this type of gross abuse was unsurprising.
Yeah, the call, going back to the earlier statement I made, unfortunately, this agent was driven by an incentive, which happened to be one of those incentives. If you look at previous minutes, compliance minutes, he was not flagged as an agent with lots of breaches. He did the wrong thing, and he accepts that. He did the wrong thing.
Now, Select, you tell us in your statement, became aware of this gross abuse of its referral program on the 1st of June this year.
That's correct.
And that was the day after Select received a request.
Not Select, but Russell Howden. First time I
That was the first time you became aware of it.
Personally, yes.
Is there a difference there, Mr. Howden? Were others already aware of it?
No, because the original call, when the letters came through, call was listened to, and they agreed it wasn't a good call, and they agreed to refund the premiums.
I see. Are you referring to when New South Wales Legal Aid contacted Select about that
Correct.
call? The call was listened to at that time?
By the Quality Assurance Department, yes.
And it was agreed that it was...
It didn't meet the company standards, and it was a failed call, and for that reason, they should refund the premiums.
You were not aware of that at that time?
No, I wasn't.
It wasn't a bad enough call to be drawn to your attention?
Didn't come to my attention, unfortunately.
Should it have come to your attention,
Yes, it
Mr.
should have.
Howden?
It should have.
Okay. But you became aware of it on the 1st of June this year?
Right.
And was that because you received a request from the Royal Commission for a witness statement in relation to Ms Marika's experience? So, had we not looked into Ms Marika's matter, there might have been no appreciation at your level of the business of what had occurred.
I think we have previously advised that we are working in conjunction with ASIC as part of a broader review. We will be contacting people in various postcodes, and we will be carrying out a remediation process.
You understand, don't you, that Ms Marika was not from one of your identified postcodes? So that will not be an adequate way of ensuring that situations like this are not repeated.
We have changed our processes going forward, and I hope a incident like this never occurs in the future.
And after you became aware of the issue on the 1st of June 2018, you tell us in your statement that you immediately summoned the representative who'd conducted the sale to a disciplinary meeting on the 5th of June.
Correct.
So after the call had earlier been identified as a failed call when New South Wales Legal Aid had got in touch, no one had taken any disciplinary action in relation to the sales representative?
Commissioner,
I'm sorry to interrupt, my learned friend. She refers to the call. There's several separate calls, and I'm not being pedantic. There is a substantive difference between the first call and then the second call, if I call them that. There's the sales call and then the follow-up for the referrals. And there is, I think, a distinction in the evidence between the two.
Yes.
I'm not sure I'm clear on that. We had understood that the 9th and the 10th of September calls were conducted by the same sales representative.
As I understand the position, the first call, which is, if I call it the call during which the sales was made, that's the one that was picked up when Legal Aid made their complaint. I don't think anybody in Select had listened to the follow-up call where the referrals were at any stage, and then Mr Howden became aware of both calls at the same time. I think that's the position.
I see. So to make sure I'm clear, the call that you say was listened to after the New South Wales Legal Aid correspondence was the sales call?
Only the sales call.
Only the sales call on the 9th of September, and that was determined to be a failed call?
Correct.
And was any disciplinary action taken against the sales representative?
I would assume that the QA would have brought that to the attention of the team leader.
Well, have you looked into this, Mr Howden? Do you know whether any action was taken against the sales representative?
I can't see any written evidence of that, but I would assume that would have happened. that
Why do you assume that would have happened, Mr Howden?
because that was the process. If there was a failed call, the QA would bring it to the attention of the team leader, and the team leader would also listen to that call.
Have you seen any documents to suggest that that occurred?
No.
But when you became aware of the issue on the 1st of June, you summoned the representative to a meeting, a disciplinary meeting.
Correct?
And you asked him, you gave him a letter before that meeting in which you asked him asked him to attend to enable a full and detailed investigation of the matter.
Correct.
And you let the representative know in your letter that you, Mr Howden, had sole responsibility for the conduct of the meeting, together with any resulting decision which was to be made after the meeting.
Correct.
And you held that meeting with the sales representative on the 5th of June this year?
Together with the head of human resources.
I see. And that was on the 5th of June?
Correct.
And then at SAF 0005, 0001, 0003, we see a letter that you wrote to the sales representative on the 5th of June, the same day as the meeting,
Correct.
advising the sales representative that his employment had been terminated effective immediately due to a gross abuse of the customer referral process in the sale of funeral insurance to Ms Marika in 2015.
Correct.
So you had become aware of this matter on the 1st of June? That's right?
Correct.
So your full and detailed investigation of the matter occurred between the 1st and the 5th of June?
That's correct, because we listened to all the calls.
I tender that letter, Commissioner.
Dismissal letter 5 June 18 SAF 0005, 0001, 0003, exhibit 4.192.
And if we go back to the events involving Ms Marika at the time, on the 16th of September 2015, a week after being sold the policies, Ms Marika had another 2 calls with Select.
Which calls were those?
Well, these were calls that were handled by different sales representatives to the first sales representative, in which Ms Marika attempted to cancel her policies.
That's correct. And I think the one agent offered a month's free.
Yes.
That's the one you're referring to.
Yes. So Ms Marika was talked out of cancelling her policies by the offer to have a month for free.
She said it would help her because she was starting work again in October, and she said thank you for that.
Do you accept that she was talked out of cancelling her policy by the offer of 1 month's free payments?
I accept that she was convinced to keep her policy.
I see. You know, don't you, Mr Howden, that Ms Marika had a right to cancel her policy for at least 14 days after the policy had been entered into?
You've got a right to cancel a policy at any time.
Well, she had a statutory right under the Corporations Act for 14 days, didn't she?
And ours goes right up to 30 days, and she has that right, yes.
Well, that's right. The statutory entitlement is for 14 days, but under your product disclosure statement that was applicable to her policy, she had 30 days
Right.
as a cooling off period to cancel the policy, and any premiums paid in that time would be refunded.
Correct.
Now, do you think that the way your representative handled that call and the request to cancel the policy in that period was fair to Ms Marika?
It appears, again, listening to the recording, Ms Marika appeared to be happy with the offer of 1 month to keep her policy going.
Do you think it was fair the way that call was conducted, Mr Howden?
What sense?
Do you think it was fair the way the call was conducted, fair to Ms Marika in circumstances where she was calling to cancel her policy because she could not afford it?
That was an affordability issue she raised, and she said she was starting work the next month. And the agent offered her 1 month free to get her back on her feet, once she had a job. And she still said at the end of the call, you can always phone me back if your circumstances change. So she did leave the door open for Miss Marika.
Do I take it from that that you think that was a fair way to conduct that call?
Well, are you suggesting that we should cancel the call each time?
I'm just asking you to respond to my question,
Yes.
Mr. Howden. Was it a fair way to
I
conduct
think
the
she gave
call?
a fair solution to the problem.
And in Select's subsequent correspondence with Legal Aid, after these matters were drawn to its attention by Legal Aid, Select indicated that it was prepared to refund the premiums that had been paid.
Correct.
And it did that as an act of goodwill. That's how it was described in the correspondence. Now, knowing what you know now, should that payment more appropriately have been characterised as a recognition that Ms Marika had been paying for a policy that she did not need, that she did not want, and which she did not understand?
Agreed.
Thank you. I have no further questions, Commissioner.
Yes. Mr Cheshire?
Commissioner, I have no questions for Mr Howden. I did raise the issue of tender of some documents which I've discussed with Miss Orr. I've drawn up a list which, Commissioner, I can...
Just before we come to that, Mr Webber, have you anything you wish to raise? No questions. Thank you. Yes, Mr Cheshire.
If I hand up the list to you, Commissioner, just show my little friend, they're just the responses.
Yes, thank you.
These are the 4 responses to various notices to produce in which Mr Howden has given further explanations, and they now have references.
Then Exhibit 4.193 will be RCD 999900570001. Select response to NP 47514 June 18. Exhibit 4.194 will be RCD 999900600001. Select response to NP 495 of 13 June 18. Exhibit 4.195 RCD 999900570005. Select response to NP 497 13 June 2018. Exhibit 4.196 SAF 000600010001. Select response to NP 654 13 June 18.
Thank you, Commissioner.
Yes, thank you, Mr Howden. You may step down and you are excused.
Commissioner, that concludes the case study in relation to Select AFSL. We turn now to case studies involving ANZ. Would it be possible for us to have a short break to rearrange?
I come back at 1:15.
Thank you, Commissioner.
Yeah.